and the land is dark, and the moon is the only light we'll see.
I won't be afraid. Will you?
No, I
Will you be afraid?
won't be afraid.
Nope.
Oh, I won't
I won't.
be afraid.
Nope.
Just as long
Just as long
as you
stay
stand by me.
above 50k.
So
Above
darling,
50k, please. Bitcoin, stay above 50k. Oh, please. Please, bulls.
stand by me.
Stay above 50k. Stay above it. Stay above it.
If the sky
I've had that song stuck in my head all day today. Hello, ladies and gents. I hope you're all doing very, very well. Nice to see you here. Synarch Official. Hola, hola, amigo. ¿Cómo está? Que bien, que querite. So I've got Twitter open here at the moment, and you can see that Peter Brandt was talking there in the 20 hours ago about this inverted head and shoulders pattern. Did exactly what inverted head and shoulders patterns are supposed to do under classical charting principles, XRP. Looking at Ripple there, and I just, I think Peter Brandt's great. You love a really horrible looking head and shoulders, Peter, don't you? I dislike that one in almost every way, such as the lack of a trend leading into it. But hey, none of it matters. Thanks for sharing. And I think maybe in this episode today, I think I'll leave that as being a bit of a theme. You know, it's not exactly a noob theme. It's not for the noobs. This is a sort of higher level technical analysis theme for today's show, with regards to the fact that when you're operating at the top of your game in an industry which has got so many people operating at the top of their game in it, and so many people losing alongside them, and every single last one of them almost has experience of being an expert at something in some other field in the past, comes along, and there's no textbook, there's no rules, there just isn't really at the end of the day. You're allowed to think these things. So I've had numerous discussions in the past with people in the past about what constitutes a pattern and what does and what doesn't, etc. And my own personal sort of way of looking at this is that I just kind of talk about it from the Bulkowski type of view, because really, you know, if you're looking for a rule book, well, then there's one, and at least we've got a common way of talking about things. But you know, that's not really at the end of the day, you know, none of that really matters. And Peter Brandt's a really good example of it. I mean, here's a guy here who talks about half-staff bear flags, completely the opposite way from what Bulkowski talks about them, and he talks about inverted head and shoulders there. And really, you know, the guy's also a bit of a troll. He loves saying stuff that people will find kind of hard to swallow, etc. And that's like a perfect example of one. Anyway, I thought I'd give Peter Brandt a shout out in today's stream, and also remind folk that at the end of the day, you know, there's so many people that get into trading and they're looking for the what do I do? How do I make money? There's got to be an answer here for me. How do I make money? You know, what rules am I breaking? What should I be doing differently, etc. And there isn't. You know, there just isn't. There isn't a rule book that you're supposed to follow. There isn't a predefined set of rules for you. Not really, not one that we can all agree on. Because if there was one that we could all agree on, then this wouldn't be an industry where only where 100% of the participants are really, you know, or 99% of the participants are at the top of their game before they even get into it, and then of that cohort, only 10% of them even make money. Then you would think that if there actually really was a rule book about how things actually work, really every single time, and this is what to look for, well, then we would all know about it by now, you know. And the same thing can be said about everything. You got people who are advocates for Elliott Wave, and other people who'll tell you, like Eric Crown, for instance, who will say to you, I've never ever ever, this is what Eric Crown will say, I've never ever ever met anybody who uses Elliott Wave in a professional setting. And then you can go and look at things like Credit Suisse And what do they do when they with their new traders that get involved with them? Well, the first thing they teach them is Elliott Wave, and they use it in all their practices and stuff like that. So it's like, really, there are no rules, there are no nothing at all. So yeah, cool. Anyway, hi Sign Mark, hi Prime, good to see you here. Nice to have you here. First time catching your live stream. Quality a little bit different today because, of course, I'm earlier than I usually am. So sorry to all you West Coast American folk missing out on that. But I wanted to get things done a bit earlier because, this suits me much better. In fact, it'd be better for me to do streams at maybe midday UK time or something like that. But I tried to keep it so it's global most of the time. And today I decided that I would just suit myself. Right, cool. So sorry to all you West Coast American folk. You can catch the clips later on. Right now, the prices of Bitcoin, of course, $56,658. And we are seeing that, of course, we're floating around in this section. We talked about this the other day in great detail. Where's my drawings at in here? Here we have them. Here's my drawings, and we talked about it now. Did I? Are any of these notes here going to actually help with today's show? I wonder, because I know that the chit chat we had in the past helps in terms of like identifying that the top end of this range was going to be in at around about 59 grand in this grey area here, that if we push past that red line, that would be very significant. But of course we needed to open and close and all the rest of it above that. Likewise here, this is your range. We traded beyond that, went down beyond the liquidity zone. In fact, actually went down as low as 55,500. We didn't actually make it all the way down to all the fives, like I'd said in the previous episode about 55,555, but we made it down to 55,600. And I'm also kind of also a little bit wanting everybody to know that as well, that there's only so far you can go whenever you're trying to do this to help people on a show, or whatever. And I often have people coming along telling me, "Oh, just tell me what it is that you're doing and what and how to get in and how to make things, like what to do to make, I get lots of people telling me that as if I've not told them the exact right thing. Just jumping over here towards EOS, for example. Do you remember the EOS episode and what we talked about? I mean, it was really quite simple, really, but I think if this is 24-hour time frame, when did I talk about it? In this candle here, I think it was. And I said that the prices would be dropping back down towards the 570 region, or the 5, maybe, was that what I said, or was it this candle that I said it? No, it was this candle that I did EOS in, this one here, and I said that the prices would drop down to probably 570 or so. That would be an easy trade to make, from up there at 625 to take it down to 570. There's 10% for you if you wanted it. The prices actually went all the way down to sort of 520, then back up the way again, and I told everybody about that exactly. So you get a lot of people asking me to tell them exactly how things are going, and I tell them in so many episodes. It's all the time, it's right there. The only times when I ever tell you exactly what I'm doing with my trades are whenever I've had some health problem, then had to take a whole bunch of pain medication or something like that, or I'm really sick at the time and my head's clouded, and it's just easier then to tell people. Just if I'm being lazy, then I tell people what trades I'm taking, and but whenever I'm actually putting effort in, I don't do that. Yeah, cool, interesting but complicated stuff, says Mark Garrett about Elliott Wave. Well, cool. It's made more complicated perhaps than it needs to be, because what you see when you see people first off talking about Elliott Wave is they say, first off, there's a wave like this, then there's a wave like this, then there's a wave like this, then there's a wave like this, and then there's a wave like this, and then there's going to be 1, 2, 3, 4, 5 of them, blah 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 blah, and they break it down in ways that are really not helpful for you. Whereas Elliott Wave is essentially based off of Fibonacci, right? Essentially, okay. So this is just an example. I don't know. I just chucked this in here to try and find out if there's a decent way to make this more easy for you, more accessible. There's like I've had it in the past, like a list of the Elliott Wave transition sort of points, etc. Look at all these guys trying to make it way more complicated than it needs to be. All you need to do is have a list. So here's a rule of them. So it makes it really complicated. An impulse consists of 5 internal waves. Wave 1 and 5 will always have to be impulses or diagonals. So right, you can skip that in terms of, that's not complicated, okay? So don't let the words make it complicated for you. Just trying to help Mark at the minute, by the way, for everybody. Hey, hi, Olivier, good to see you here. Sign Mark, by the way, my job is a trader. I don't have a job, if you like. I'm unemployed. Yeah, I'm a professional trader, right? So anyway, an impulse consists. I'm a professional trader, and I'm here, and I take, yeah, dude, man, I'm super early today. I just wanted to be early. It's just, it's way more convenient for me. The most convenient for me probably would be to do this at about midday, or it gives me in the morning to myself. Then I can have this done at midday, and then get on with the rest of the day, etc. And maybe I'll go back to doing something like that. I'm kind of feeling like I should in a way, just because it suits me better. Not sure, but I always dedicate so much time to doing these things in the evening to try and help for the global audience, because I think if I start around about 8 p.m. UK time, it means everybody in the West Coast, the Middle, the East Coast of America, and the English language speaking world can all tune in, apart from Australia, but Australia. So that's the idea. That's the idea. To try and make it global, except it costs me far more, because it bleeds then into the nighttime when I'm making these clips and everything else. And you've probably seen it yourselves in the publishing times on YouTube and the comments that come through after people have put a comment on my video and I'm responding to comments, and it keeps me up all night and it ruins my kind of routine. And overall, it's just not worth it to me to in the long run. And anything that's not worth it to me in the long run isn't worth it for any of you guys either, so like because it's all about the long run here. So good, yeah, suits me just fine. I prefer midday. Yeah, so that's what I'm probably thinking along those sorts of lines, Peter. I mean, because as well, Peter's watched the channel, he'll know that that I used to put out videos a lot earlier on the day than I do these days, and I've been catering too much to the West Coast of America. Anyway, that's all fine. I'm just going to run through this real quick. Maybe I'll even make a little educational clip out of this one, because just reading through all of this, it feels so dense and heavy to people. And this is what Elliott Wave, this is how they're trying to set it up, so it's like hard to access the information. And just reading through this together is probably a good idea. Now, I found this website at random, so I'm not sure if this is like I've not fact checked this one, so to speak, and well, there we have it. But it's probably copied and pasted these from somewhere else anyway to make this website anyway. That's the reality of it. Anyway, so you've got 5 internal waves. Wave 1 and 5 always have to be impulses or diagonals. That's just ignore that. That's kind of just bullshit. It's not bullshit, but it's just describing things. It's just describing it. It's either going to look like it's going to be correct, or you're looking at sideways price action and what you're doing. Obviously, right? Wave 3 has to be an impulse by itself, i.e., it can't be a diagonal. Right, so that's a more interesting point. Wave 3 must never be the shortest in terms of percentage gain loss within the sequence. Again, whatever. Wave the shortest in terms of percentage gain loss within the sequence. Right, wave 2 is always corrective pattern and must not retrace more than 100% of wave 1. So how can we do this in a way that you can see it? So first off, we're talking about waves, etc., and then impulses. What he means by that is for it to go up like fast, as opposed to kind of going slowly up towards the target or whatever, even though 45 degrees is hardly slow really in terms of price action, especially here on the logarithmic chart, right? And so bear that in mind as well when you're looking at things as well, at logarithmic, linear. If you're looking at incline, and that sort of incline on linear suddenly becomes, maybe a bit more on logarithmic. Depends, obviously, on what sort of levels you're looking at. Wave 2 must, what was the rule here with wave 2? Wave 2 is always a corrective pattern. Wait, this is bullshit, because obviously, corrective pattern. And it must not retrace more than 100% of wave 1. So it must not go down past here, which makes sense, because Elliott Wave isn't looking at stuff like this. That's not what Elliott Wave is all about. It's not like that. It's not about going sideways. It's this simple idea of that we're looking at this type of price action. So an easy sort of chart to look at as an example of that, just because we're all familiar with Bitcoin, right? I think everybody that tunes in here is familiar with Bitcoin. Let's just bring up the Bitcoin chart here, so you can see 24-hour time frame. Zoom on out a bit here. Hide all the drawings just off of this chart so that we can see what we're looking at. So you could conduct this sort of analysis on these waves here, right? These sort of waves that we've got. We've got trend in price action. You're looking to see how things will go, etc., etc. So you don't want to be taking out the lows. Market structure wise, you don't want to be doing that anyway. It ties together. Wave 2 can be any corrective pattern except a triangle, but it can be a complex combination that ends with a triangle. So just ignore that. It's basically bullshit. Wave 4 must not enter the price territory of wave 1. So if this is going to be sort of anywhere up here, would be like wave 4. You're not going to want to enter into the price territory down here. Well, in a second you'll see that that's kind of more or less going to be impossible anyway if you're looking at the right stuff, because of the way that this all works. Wave 4 must always be a corrective pattern. Any, right? Cool, whatever, great, nice one. Waves 2 and 4 tend, and this is the word as well, like tend, that none of these things are hard and fast rules, okay? And like when people come up with these things like harmonics and Elliott wave, etc., and try and put really hard and fast rules about things, then I'd just like to remind you, that that you're going to have people out there who are experts in a field who talk about one thing, such as Peter Brandt, who talked about his head and shoulders pattern, which of course doesn't comply with the textbook. In fact, screw it, I don't need to bring it up. Doesn't comply with the textbook, or whatever. So that's, it's a tend is what you can apply. And anytime you see a hard and fast rule really anywhere in trading, even in harmonics, by the way, because harmonics has got really fixed rules about where things need to go to, like Elliott wave here, but it's about a minimum, so it needs to at least retrace as far as, and then as well you can look at the maximum, and the maximums always come into market structure, because if you're looking at 100% retrace, that is effectively saying that you're taking out a previous high or a previous low, which means that you're trending down or up at that point, so you're not looking at the same thing, okay? So it's different at that point. And I think that's obvious, but people who want to have words, loads of words in their descriptions, tend to include that sort of, meaningless type talk. It's not meaningless, but it's, whatever. Wave 2 and 4 tend to create alternation between each other, as outlined in introduction to this guide. I'll skip that line. Wave 2 retraces deeper levels of wave 1 than wave 4. Wait. Here we have the guidelines. If wave 1 is extended, then size of wave 3 to the end of wave 5 is often a 618, 786 relative to the size of wave 1. So relative to the size of wave 1 means if you want to do it the easiest way, give me a chart that's got nothing on it here. If you want to do it the easiest, right, just so it's got less. This has got less. Good, right? Then what you can do is you can take out the trend-based Fibonacci retracement tool. For instance, this would be the easiest way of saying that. So what you're looking at is for the 1618 essentially is where you would be looking for in terms of what does it mean to do a 1618 or to do a 618 retracement here. So when they're talking about, when it says if then to the end of wave 5 is often the 68% relative to the size of wave 1. So essentially, Elliott wave theory boils down to, can we make it to our 1618 Fibonacci retracement target after having found support at this area? Can we trend up to that area? That's all it's saying. That's all it's saying. It's super simple. Now this page will make it seem extremely complicated, but it's actually this simple, right? We've got a wave. We're looking to try and get up to that area. Can we do it or not? That's as much complicated as it needs to be. Really, that's all it is. And so often then you'll see me talking about things and I'll use a Fibonacci and I'll say, now I'm not Mr. Fibonacci over here, for example. And I'll say, but this is where we'd be looking to. And I so often draw a reference to like the 1618, etc. And that's why, right? Not because of Elliott wave specifically, but because of the extreme amount of overlap that you're going to find with people who thought that they've invented something new, when really all they're describing is that, if we go past 100% retrace here, we could look towards this target. Looking beyond that target would be like really, really greedy, but and there's going to be pullbacks along the way. If we actually take out any of these areas, market structure wise, then it's game over. If we do certain things then it's over. Otherwise, this is where we're looking to, yada yada, and all that sort of stuff, right? So then anyway, if wave 1 is extended, I'm not too sure what they mean by extended, then wave 2 and 4 are very likely to be shallow. So again, like, it's what I think what they're saying is, if you've got a really big wave 1, then the smaller waves might just retrace a little bit. So often you'll see me in the analysis talking, and I'll say, oh, we've had this. I'll say something like, we've had the price action's done this thing here, and I'm looking at it and saying, and I'll say, okay, so we want to stay above the 236 Fibonacci retracement point, or whatever, and I'll go, oh, look, there's a 236 there. We went down, we went almost as far as a 618. And when I'm saying something like that, then if you know about Elliott Wave, for instance, then you'll be hearing me saying that and thinking, oh, right, cool, because, we went between one of these two levels here, etc. And that's all that this is. It's just a way of putting a narrative around this. If wave 1 is extended, then wave 2 will often end at the level of subwave 4 of 1, i.e. the internal wave 4 of wave 1, like i.e. oh, that really explains that for us. Anyway, so take your time to read through all this sort of stuff, look at it, and just bear in mind that all Elliott Wave really is saying that there's key Fibonacci levels that you're likely to see the prices go into, and then of course we go on up to the next level after having tried certain things. So what did I talk about with this area up here? I said this is a wedge on the Bitcoin chart, and that this is the fingerprint of the wedge. You can see over the last couple of weeks, if you watch all the videos that I've put out about it, you'll see me describing like the fingerprint of it, how we're kind of getting along, what this structure of this all is, and that's me describing the same thing but without sort of hocus pocus Elliott Wave type nonsense added in on top, right? It's the same sort of thing, and it doesn't matter, and ain't nobody out there going to ever tell me that I'm wrong now at this point. Just like how it's far be it from me to tell Peter Brandt that he's wrong about his head and shoulders chat from classical pattern trading, because he's not wrong. He's absolutely right, even though the textbook would say that he's wrong in inverted commas. Okay, so far be it from anybody to say that I'm wrong. Likewise, that's that. So it doesn't need to be any more complicated, doesn't need to be super complicated. And I would say as well that, in terms of your faith, if you're looking for a reason to sort of invest your faith in some particular doctrine or another, you're looking for a dogma to follow because you've got a missing hole in your technical analysis heart needing to be filled with some degree of faith or another, then you don't, then whatever, sure, Elliott Wave, fine, there's a whole bunch of them, right? So anyway, let's just see what the chat is there as well. Ventilus, like smashed. Thanks, by the way, everybody hit the like button, really do appreciate it. If you want me to talk about anything in specifics here today, then let me know what it is you want to talk about. I've already talked a wee bit about Elliott Wave today. Now, why do I never talk about Elliott Wave on the show? Well, you can imagine that if I had to follow the structure of talking about Elliott Wave during the show, when I'm looking at things like this wedge here, there's very little learning having happened, right? For anybody, what learning are you really getting? So people who watch along a lot of the time know that I try to, in a sense, be positively manipulative in the knowledge that I hand out. Knowing that how people learn best when they're ever able to take their previous knowledge that they've got and apply it somewhere else. So if you'd watched over the last few weeks about the videos of this particular wedge that we're going through at the minute with Bitcoin, then you'd know all about that. And you'll be able to apply that to Elliott Wave and hopefully give you that context, which creates this transformative effect, and then you don't find yourself forgetting what you learned 6 months later. And that's just part of how I teach people. Hey, Craig, good to see you. Thanks for joining us. Mark says, love your style. That's fantastic. Good. So I'm glad it helped you. Nice to see you, Scott. Good to have you here. Nice to see you, Phil. Nice to see you, Dude Man. Signarch official Rocky, you've seen TKO released on Binance? 3,500%, 10,000 for a second. Someone catched it at $10. No, I didn't see that. That's insane. Shall we take a quick look at its chart then? I suppose over here on Binance. There we have it. So often people tune into the show, by the way, and they ask me to do TA on something like this. And that's really funny. As the official spokesperson for the West Coast of the US, I can adjust my schedule to catch you live if you need to. But if you're burnt out and quit, then I'm going to lose all my crypto and dumb trades. That's what I'm talking about. That's what I'm talking about, dude, man. Yeah. So, I mean, I appreciate it, right? I get it because I love people in the West Coast. It's probably one of my favorite places in the world, really, is the West Coast of America. It's really fantastic. Maybe not for all the reasons why the people who live there themselves think. I don't really know. I love the boiling, the melting pot of cultures. I love how many Mexicans there are there. I love guacamole and all that food. I love the light and everything else. So anyway, maybe I'll move there one time. I love Scotland a lot as well. Right? Okay. So right. Anyway, yeah, cool, nice one. So Rocky, no, so yeah, right. So we're all caught up. Okay, nice. You live the dream, dude. Yeah, that's right, man. Sign Mark. I do. I live it. I live it. I love it. I saw about the TKO, says Sunjul Kojak there. A guy on Reddit claimed the spike he put on a silly limit order in as a joke, and somebody smashed in a market order immediately and filled it. He said he made 184x returns. Wow. Well, that's amazing. And I suppose he just thought, oh, I'll put it in at $10, right? Just $10. Boom. Hopefully we'll get there. Wow. Fantastic. Happy for him. If anybody wants to try and do that sort of thing, then Kraken's probably your best choice for it. Because if you look at something like what's on Kraken, what's Kraken even got on it? What's Kraken even got? I don't know. I don't go on Kraken enough to tell you, but I just know that it's full of these major lack of liquidity wicks. This happened as a result of no liquidity, naturally, in combination with that's why you'll often see an exchange when it's listed a new coin saying, "Oh, we're accepting deposits and all this sort of stuff." Why they're doing that? You may be thinking, "Why are they doing it? Why does it work like this?" Well, of course, they need the users themselves to fill up the order book, and this is obviously not like that because nobody had really ever heard of TKO before. And by nobody, I don't mean I don't mean that literally. I just mean that in a sort of statistical point of view. Right. So, and what happens, by the way, when you try and appeal to so many people at once when you do your technical analysis and make it nice and broad, is that you end up with charts that look like this, right? And then you spend time during the episodes trying to fix it up. So what are we looking at today? What is the deal today? What's happening today? Well, today there's a bit of volatility, and I want to show you just if you look here on the right-hand side where I've got the list of assets, right? You can see this negativity that just kind of the red numbers, right? Red, 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 and then these wee brief. Well, that's actually a 4x pair, so ignore that one. These wee brief moments, that's oil futures. Ignore that one. So all red. Then you get down to Ethereum Classic. So we've got a good performer over here, Ethereum Classic. Wow, nice, fantastic. That's done well. What's it in dollars at the minute? $19 for Ethereum Classic. Wonderful stuff. It's come up towards here. Would you be advised to buy the top? You know, I mean, like really as well, viewers, everybody, audience out there. You've been surely when you look at something like this, by after this amount of time without doing any technical analysis on this thing at all, you can look at this and you could be somewhat skeptical about whether or not it's going to just rip towards the top side. Now, not for me to say that this never happens, because like I say, there's no such thing as rules. There really isn't. However, statistically, the likelihood of this happening is like if you went into a casino and sat down and you hit blackjack at the blackjack table and won, and then in your next hand you hit blackjack and won, and your next hand you hit blackjack and won. Then somebody saw that happening, came over to the table, sat down next to you and watched, and then you hit blackjack again, and they thought, this looks all right, I'll get in on this. And then they start playing it, and they also hit blackjack several times in a row. That's what this is like if it goes up. Now, is that to say that that can never happen? Of course not. It's like that would be insane. So, like, you know, the record for the amount of successful rolls on a craps table is something like 147 or whatever in a row, which is the chances of that happening are something like 1 in 13 trillion or something like that. Ridiculous odds. So these things certainly can happen, but you know, at some point as well, I think it's worth every so often, and this is what I'm doing today here. It's worth coming in and saying to the people who've made it past that noob phase of trading, just talking to you guys who are in the middle. You know, you've done some trading, you've learned some things, you're trying to put it all together, and all the rest of it, and you're starting to get to to that point that you went through in real life as a teenager, for example. You know, whenever you're in like, you know, preschool or whatever, rules are extremely important. Then whenever you're in whatever you call it, I don't know what people around the world call it, we call it primary school here, you know, up to the age of like 10, your rules are still very, very, very important, but you understand that you can see people breaking them, etc. Then you get to high school, and suddenly you discover that if you want to skip the class, you know, you could, right? Maybe not in the first couple of years of high school, but later on down the line. And then later, you find out that there's all these things happening where rules don't really matter. Like you grow up and you watch the American president being impeached. Well, you don't grow up necessarily. Not everybody was alive for Nixon, right? But you watch Nixon getting impeached, and then you think, wow, that's amazing. Over that, that's awful. No president should ever act like that. Then with the Watergate scandal, then you watch like Clinton narrowly escape being impeached, having lied about whether or not he was banging Monica Lewinsky and stuff like that. And you think, wow, that's amazing. These are rules, and that guy narrowly avoided it. And then you watch a few years go by of like Trump being in charge and constantly trying to impeach him, and the Capitol Hill thing, and everything else, you know. And you realize, no, actually, there are no rules. There aren't any rules. There just aren't. And it's the same thing. Like somebody gets convicted for a crime, they appeal it. They fail, they appeal it again, they fail, then they take it to the Supreme Court or whatever one you've got is your arbiter of the courts, and then they get found to be, you know, they get what do you call it, found innocent at the end of the day, whatever it is. They get their conviction overturned, and you think to yourself, well, what are the rules then? What are the rules? Was he guilty? Was he not guilty? You know, whatever. And then of course, you know, you've got other rules like Jeffrey Epstein, really horrible, terrible person, definitely, you know, deserved every bad thing that was going to possibly ever happen to him. But that doesn't mean that you're allowed to then go into his jail cell, murder him, and all that just to protect yourself. You know, Prince Andrew, for example, is a well-known. Well, I can't say this, but everybody knows what I want to say, right? But I can't say it because he's alive and everything else. But when I don't say that, you know, everybody knows what Prince Andrew is. Everybody knows, right? But he's a prince. So what are the rules? I don't know what the rules are. And that applies across the board, okay? And it's the same thing with Head and Shoulders and everything else, and Elliott Wave and everything else. So, you know, you'll be doing your Elliott Wave and it'll go a little bit beyond, and suddenly, you know, you're breaking the rule, but then actually, you know, it still does everything that you thought it was going to do anyway, and you got out of your trade, and then then you think, oh, that's terrible. The thing about the rules is that if you stick to those rules, then statistically over time, you'll probably do better than if you didn't, right? Probably do better than if you didn't. Okay. So for instance, Prince Andrew goes out to a nightclub and somebody says to him, hey, there's these rules, Andrew. For instance, if you want to go up and talk to that girl over there, she's like 21, right? That's okay. If you stick to these rules, you'll probably be okay over time. But then occasionally, he talks to somebody else and then, you know, gets away with stuff because rules, etc. So anyway, right, nice one. So I don't know what am I looking at here. Why did I want to come over to Ethereum Classic? I've got no idea. Let's just get back on with the show. Actually, do it properly. That was just a little bit of chat. We're 30 minutes into the episode. I want to have the episode over fairly quickly, so I've got like 30 minutes to wrap things up here. Let's see if we can talk about things in a way that is useful for anybody out there at home. So this chart's been annoying me because it's too noisy. So let me just see here. Right, so anyway, we've made it above this red line over here, 55.55555, and we did that several times. Obviously, over the last couple of weeks, we've been up there an awful long time, you know, majority of the time, in fact. And we're starting to build up this liquidity here, etc., on the right-hand side of this liquidity, but this knowledge that since we've been here for quite a while, then there is, of course, a lot of buys and sells have happened in this area, which speaks for itself, you know, like as soon as we kind of make it past one zone, then we could be into the next one, but we're not there yet. Now, in the meantime, you're obviously better off trading within that general region. And if you're looking beyond either of these two zones, you're taking higher risk. If we do crack down below this area properly, the 55.55555 area, then the next target to have is going to be 52 if you want to be conservative about things, or 52.5 if you want to be conservative about things. But really, you're looking down towards like closer to 50. 51,500 would be a reasonable target, but let's call it 52 since we've already got the line drawn in here. And there's probably good reason for that, and we'll just go with it. And then looking up to the top, right? If we break outside of this zone, then fantastic. Are we going to the moon? Well, quite obviously, there's this high here. So anywhere in this zone is an area of risk, which is different. Which is a different risk zone in here. It's a different risk zone. This one here that I've just drawn in is different to the risk in this orange area. It's very different to the risk in this orange area, okay? And it's also very different to the risk above this area, okay? So this area here, we've got the happy face inside of it. This is very different to the risk here, okay? How much more does anybody really need me to break that down? Realistically, I think not at all. But you never know. Maybe people do want me to break it down a little bit more. Current profit taken targets at the minute 59,000. Naturally enough, could we be on the way there? Maybe we could. What I'd actually left this for is because I wanted to show you that in the markets at the minute, what we're suffering is from this big old redness, red across the board, with occasional outliers as well, like Ethereum Classic, and also some interesting little dynamics that we've seen here. So, for instance, Harmony 1 versus USDT is up 5% on the day. It's up 8% versus Bitcoin. Now, I could show you this versus Bitcoin, and you could, and that's interesting enough. Let's just look at it. Now, a lot of people as well get confused about the need to look at Bitcoin or the dollar. Really, just bear in mind, what we bear in mind that if you're sort of sensible, if you're able to think laterally, you'll probably be able to reconcile the different prices versus Bitcoin and the dollar yourself more or less inside your head, at least to an idea. But it's good to check them for key areas, what we know here is that we had a chart versus Bitcoin, and our highs versus Bitcoin came up and equaled our previous highs, and that's when we saw a retrace down the way. Okay, so this is a Fibonacci drawn on for Harmony 1 versus Bitcoin, came up to our very, very toppy highs, and then we pulled back down. And since then, where did we drop down to? Well, interestingly enough, back down towards the 50% area, not bang on the 50% from the all-time highs to all-time lows. But if I draw in a Fibonacci from the, and what's this to do? Is this to convince you at home to use Fibonacci yourself? No, it's not. It's to show you just essentially how far we moved in terms of this back down the way. Now, of course, those two Fibonacci retracements are exactly the same one, but you can see that we came bang on more or less, let's call it, to the 50% area, drawn it around the other way, right? Because that's the extension that we're in. So then you jump over to the dollar pricing and you see like hugely different looking chart. Why possibly could we have stopped there? Well, this is where you get your information from in terms of like looking across. This is when it becomes valuable to look at one coin at Bitcoin, or any coin, sorry, this happens to be called one, but to be looking at any given cryptocurrency versus Bitcoin, and people come into the comments quite a lot and say, you should be looking at it versus Bitcoin, you should be looking at it versus whatever, when I do one or the other too much. And it's about the relationship that exists between them. It's a three-way system, of course, right? So you have to triangulate. The price of one at any given time is essentially a triangulation between these different markets, right? And all that. So that's what we had. And on versus Bitcoin versus the dollar, then how far did we see the retrace going? And we came all the way down and fulfilled the golden pocket, then bumped back up the way. And overall, you're seeing that we're up, 4% right now, but it was 5% we were talking about it earlier on. But naturally, actually from the lows up to where the prices are right now is up 27% on the day. So what we're looking at here is a really volatile day where monies are flowing around, right? And that means that actually what I want to look at in today's sort of chitter chatter is to look at things like the Bitcoin dominance chart. Now, I just want to show everybody that Bitcoin, this is actually CME, sorry, Bitcoin dominance chart, right? Great to look at and everything else. So this is obviously a function of trend, really. This is derived from, it's not a derivative product, but it's a derivative of, looking at the markets from a broader point of view. And really all you're looking for here is trend, and then significant inflection points where you might find the trend shifting around. This has obviously performed very, very badly. Done 100% retrace, come up here and suffer, and so far not able to actually break above the 100% area again. So if we do see Bitcoin able to sustain its prices within that range that we're talking about, then what we're looking for, of course, is for strength in altcoins as demonstrated by this chart, right? That's what we're looking for. Okay, let's just sort of clarify, like, compound that and say, well, okay, so we've got this upward looking movement here overall, and while today the markets have suffered a chunk, we're seeing that this is quite a big drop down here in terms of the total market cap from its highs down to its lows, going down more than 7% in a day. From the entire market, we've taken off from a market that's got $1.8 trillion inside it. 7% is enough. I'd like that 7%. Send me the 7% in the post, and I'll take it. Anyway, so that's a big amount of money, and but overall we're trending towards the top side. So if we can see this trend continue, then good. So then just to bring this back again and say, well, naturally, when people say that we want to see Bitcoin do well, for the whole markets to do well, rising tide raises all ships, that what we're looking for, of course, is for Bitcoin to continue to push towards the top side, and ideally in terms of an alt season, for us to actually see this in terms of the dominance chart fail to take back out the 1%, the 100% retrace area, and therefore you're looking at the potential for a sort of alt season where you might get extraordinary gains. Now, of course, those gains are still capable of happening within the ranges of what we're trading if you're actually able to kind of be patient and catch key areas. So OneCoin, for instance, was a good example of that. I'm going to actually have to do the TA now, I suppose, to make the clips for people. I'll just make sure I can catch up with everybody's chat. What do I think of Litecoin? So we could take a look at Litecoin in today's show as well. I'm seeing somebody say, the exception to the rule is the rule. That's right, Craig, of course, as well. And of course, the other thing is the man with all the gold makes the golden rule, right? Okay, so remember that one. So when Peter Brandt talks about inverted head and shoulders, he can be the man with all the gold, if you like. And then when I say to him, but Peter, I thought that you would needed to have had a trend leading up to head and shoulders for you to really be able to trade it, he would say, no, I'm the man with all the gold, and the golden rule is, in this case, no, you don't. I've decided that you don't, and who's going to argue with that? I'm not. I know not to do that sort of thing. Now, of course, that means that you're going to have to, Peter Brandt, if you're going to take any lesson from him, he talks out there in the open. He trades his own game entirely, right? And he talks about things like classical charting, like as if he's a massive proponent for it, and he is a proponent for it. But he's hardly the ideal ambassador for these things, really, because he's very much a discretionary trader, and he's very much based on a combination of patterns, which are really just looking at support. When anybody looks at a head and shoulders, here's a head and shoulders here, for instance. What they're really doing is they're looking at the support line here and the resistance line, and they're looking at market structure with regards to your previous shoulder areas. That's all they're really doing, and of course the neckline itself, and that is the same as any chat. So here's an area of support and resistance. You've got a support here, support here, support. We broke it, we dropped down the way, etc., etc., etc. The 886 being that that rubbish Fibonacci retracement point that never really works. There you go, seeing it happen yet again for us. Right, so I need to do the Bitcoin episodes. How's this chart looking? Is it clean enough? Right, it's clean enough. Let me just set something up here so that the folk back home feel that they've got a satisfactory whatchamacallit, episode for them. Right. Oh, no, I don't want to do it that way around. I want to talk about it. I want to talk about it from this low to this high. I think maybe I do. Yeah, I think maybe I do in a way. I could bring this onto the chart during the show. I'll bring it onto the chart during the show. What have we got here? Let me just remove these lines as well. Screw them. And that. And that. And this. By the way, as well, I asked everybody recently on Twitter, just before I go into this, let me know what you think about this. This is a genuine question, by the way. I'm not trying to annoy anybody. I'm not trying to annoy anybody at all. I want to know, what do you think? Should I make posts like this? I think I'm going to, by the way. So this is why I'm talking about this. How do I get to like my profile here? I asked people, I never got any responses from it really that told me what people thought. So you can tell me what you think yourself. So I saw this tweet from that Martini guy. I really like this guy because he helped me when I started my YouTube channel, and I think he's friendly and all that, and I like it. Anyway, he said, Bitcoin on the cusp of breaking 60K, noobs, time to panic sell, laughy tear face every single time. And I'm trying to wonder, should I be making tweets like that, slightly disparaging of noobs, but then at the same time also blaming noobs for the market retracing from an area of resistance. I mean, we're looking at the chart over here, and we've got this line here. We've got the previous high here. We've got our market structure showing us that this is key area for us. We've got numerous instances along the way of having found resistance at the 59k area, right at 60k, and then of course experienced traders are selling it here. Experienced traders, experience is selling it here and taking money, and happy to sort of see if we can get moves elsewhere up towards those levels, whatever they happen to have been at any given time, right? So one instance, two instance, three instance perhaps of this. Is that what I should be talking about? Should I just ignore the technical analysis, which is staring us in the face, and put blame onto some part of the market who'll read it, misinterpret the tweet, and apply it to themselves? Even though he's actually saying that what we need to see here is a bit of strength to get through this area, and that if it wasn't for the panic selling at 60k, we'd be at 66k already, is the implication of what he's saying. I mean, should I do that or not? I want to know. Let me know what you think of it. So let's just do the episode real quick, right? In this episode, what I'm going to be talking about is I'm going to say that there's an ascending triangle here. I'm going to say that that these moves up towards the top, like I just drew in there now, have all led to us coming towards 59k, and we're looking to bust past it. At the minute, we're in danger territory because we're below the 236. If we take out the 236 and invalidate the Fibonacci, then what we're looking to, of course, is 59k as a potential profit taking target. And then, of course, the potential measured move off the back of this up to 76,000, right? Is what I'm just going to say, even though the reality of it's more like 69,690, right? Okay, is that cool? Is everybody good with that? Because just present the episode before I actually make the episode. If you want to, then yeah, was it not irony? It was irony, Craig. Yeah, it was irony, but it's irony. It is irony, and that's why I'm asking. I think this guy's great, person, helpful, and considerate. Should I be putting out tweets like this, though? Should I be? What do you think? I could grow a lot quicker on Twitter, but I think it'd be out of sync with how I usually do things. I don't usually do sort of ironic tweets like that about stuff because people look at what I say and think, well, Rocky wouldn't say stuff like that if he didn't mean it or whatever. Also, the implication from this is that if you were to sell, that you're a noob. When in actual fact you're not a noob. You're and that sort of thing. So should because the written word, I appeal to a global audience now, and I want a global audience. If I was only talking to people like K-Doc from Glasgow or Sanjo Kojak from Edinburgh or any of the other Scottish people that I've got on here, I'd just be thick irony constantly. Like everyone from around the world wouldn't understand what I was saying. It would seem like completely off the wall, right? Crazy, and the amount of irony, and it would seem like I was being negative and acerbic towards people, and actually we were just having a good laugh and being friends because that's Scotland. So I get it. Like I get it. Like I get it. Don't think I don't get it for a second. I'm genuinely asking, should I put out tweets like that or whatever? I mean, should I put out tweets like this? Bitcoin wants to break 60k today. Let's go. Should I put out a tweet like, would it be bad for me to tweet this right now? Like, so I know that my Twitter would grow a lot better, a lot quicker if I did this. So tell me now. In fact, I'll leave this for everybody in the chat. Let's do a quick poll. Thumbs up if I should hit the send button on that one, right? Or thumbs down if I shouldn't hit the send button on it. Now, the rules for making this tweet is don't care about the accuracy of it. Don't care if new traders make mistakes off the back of reading it. Just don't care. Just say something that's to do with Bitcoin that sounds positive, right? Or whatever. And at the end of the day, if this doesn't work out, if it doesn't break 60k today, then I'll just call this irony and be done with it. Right, so let me know, and of course I'm going to take it on what the vote is. Not everybody has to vote. There's no minimum voter turnout. If I only see one thumbs up, then I'll hit it. If I only see one thumbs down, then I'll not hit it. Right. Anyhow, cool, nice one. So let's do this. I was short on trading Litecoin, or yeah, Litecoin chat. We'll get around to looking at Litecoin in a wee bit. Drawing fib from left to right, bottom to top on daily, and opposite of going down. No, you don't do anything opposite of going down. In price action here, price action, here's some price action towards the top side. Here's some price action towards the downside. When you're doing a Fibonacci, you only ever go left to right. Oh, sorry. In terms of opposite of going down, yeah, exactly. Then in terms of here, you only ever go left to right, and then it's top down if you're going down the way. Just actually, as you said, absolutely good one, nice one. That's a good tip that everybody needs to know. Maybe I'll make a video on that. You ain't being you. Down, thumbs down. Yeah, I thought so. That's what I'm saying, man. That's what I'm saying. Thanks, everybody. I feel like, yeah. So what I need to figure out, right, is how do I be me? How do I be me and at the same time use this freaking social media thing to the advantage of everybody? How do I do it? How do I actually do it, right? And that might seem a little bit kind of stupid to the audience, and that's cool. I'm a little bit blind or dyslexic, if you want to, whatever, I've got some sort of like chip in my head is wired wrong, that I don't know how to use this. I don't know how to use it. I just don't. So what do I say? What do I say on this thing? I want to know. I don't know how to use it, right? That's my point here. So anyway, we'll go back the way and we'll do this real quick, right? Drop a stream marker in here. So I suppose this is kind of what people have been waiting for anyway with terms of the Bitcoin technical analysis, right? Sound. Oh, I'll make myself big, right? I'll make myself big first off. Cool. Pretty dark. That's harsh. That'll do. Hi, friends. Bitcoin is looking at 60K and thinking, can I break up above that level or not? Over the last couple of weeks, we found ourselves unable to break past it. Is that a good thing or a bad thing? Are we looking at the markets rolling over and then before they drop down and everybody gets into bear mode? Or are we looking at the markets kind of building up a bit of strength maybe before pushing on past? A couple of different ways of looking at this one. Let's try and break it down and see if there's any insights for us in this show. I'm going to tell you exactly what you need to know to be able to trade this thing fairly successfully over the next wee while. Thanks for joining me. My name's Rocky Outcrop, and you know what? Actually, I'm going to make the start of this again. Right? And you'll notice a difference here. You'll notice a difference here when I make the start of this one again. You'll notice a difference. Okay. Yeah, Andrew Gibson, inverse relationship between IQ and Twitter comfort level. That's it, man. I'm like, how do I use this thing? And I'm seeing everybody else running around there, and to me, it's like going to a kid's play park as an adult and kind of looking at it, going, well, I can see there's lots of people in there having fun, but right. So let's just drop another stream marker so I don't forget I did two. Hello, friends. My name is Rocky Outcrop. We're about to take a look at Bitcoin. We're asking a couple of key questions in today's episode. Will the prices be able to push past 60K and go up to another target? And I'll tell you my exact price point in this episode for where I'm looking for the prices to go before I take profit. Or are we looking at the prices potentially rolling over and going to the downside, kicking off a bear trend for us? Let's look at that and a heck of a lot more in this episode. Thank you for joining me. Likes and subscribes are massively appreciated. And here we are back in the charts. I want to show you that this is actually filmed during a live stream. As you can see, everybody chatting away down there. Be sure to join me for a live stream sometime. I really love interacting with the audience and helping people. If you've got a question about some particular part of technical analysis, I can help you out. Here we have beside me, just here, the 24-hour, and you can see the price, the number of you can see, if you look up there, the time frame very easily of the Bitcoin USDT chart. Now I've expanded out those areas so you can see them more easily as I flick between different charts. what we have here is the prices having been in a really good, strong upward trend. Now, the drawings that I have on the chart here, as you can see, I just hid them, reveal, hid them, not very many, so we're not going to complicate this too much. This should be a good help for you. What we have when I hid the drawings left on the charts here are all these lines. These are moving averages. And on the broad time frame, you can see that they're all spanned out nicely towards the top side, pointing up the way. And it begs the question, is there any utility in these on this time frame? And really, frankly, in terms of what we're going to talk about in today's episode, not much. But if I drop down to a lower time frame, you can see that there's a different interaction with these lines compared to the bigger time frame. So we'll cover that as we go through the episode. But I'm going to bring on the drawings and take off the moving averages for just now as we discuss this price action. There are three key areas for us to be aware of from the broad point of view. That is up here in the 59 to 60k zone where we have our first line, down here in the 47s to 50k area for the next zone, and then down here below from the sort of 41 to 40k area for the next zone. If we were to see the prices go towards the down side. In terms of upside profit taking targets, there's a few different ways of coming towards similar conclusions with regards to these upper side targets, one of which is to draw on a Fibonacci retracement and look at the extensions beyond towards the top side. On the high between 21st of February and the low on the 1st of March, a Fibonacci extension up here takes you up towards the 1618 area. Sorry, I said the Fibonacci number, 68k area. And if we look at the Fibonacci extensions from the last up and down movement, we can see the 1618 takes us up to $69,000. That's a couple of ideas to keep in mind, and I'll just pop a horizontal line in around about that region so we've got an idea of roughly where those zones were coming in at. Now, there's a pattern here to the way that prices have been operating. You could say if we actually overlap our resistance line at the top and then line up the lows here, you can see that this operates more or less within the structure of an ascending triangle. And if the prices do push past those zones that we're looking at, of course, not the red line itself, but the zone right up here with key attention paid to our previous high and the 62k more or less area, where that takes us to is all the way up to 74k. Now, we could go there as a result of breaking this area. However, I would be more inclined to look along the textbook type idea of taking profits in at around about the 60%. Drew that upside down for doing this for the purposes of what I'm trying to do, in around about the 60% area of that measured move. So where is that? And I'll just drop on a horizontal line so we can see. As you can see, it's actually lining up with a horizontal line anyway, nicely. I'll get rid of this. So the measured move, 60% of the measured move takes us up where to? That 1618 Fibonacci target we had drawn in earlier on. A couple of nice numbers you could choose, like 69, 69, 0, and stuff like that for your profit taking target. But these are all zones because, of course, the volatility, the stop losses, everything else will kick in, creating volatility in around this area, making it so that there's wicks, etc., that could push up and down. And I tend to try and avoid being greedy. That's the upside scenario. What are we looking for that to be a success? Well, hopefully Bitcoin is able to stay above a key area. Let's call it 54,500. That sounds like a good enough. That sounds about right. Let's just stick in another horizontal line. 54,500. Wow, that's strange. People who subscribe to this channel will probably have heard that number before. Here we can see in this instance, that's showing us where the lower area of this consolidation pattern is occurring at. Couple of quick things just to say, in case we were to, in case this is just continues on and doesn't break it immediately, you could maybe make the argument that we've got a symmetrical triangle, but over here, you can see this doesn't attach to anything. So perhaps the symmetrical triangle is in this region, in which case your measured move off the back of it, oh my goodness, it's the same measured move. How convenient. Great. So that's that side of things. How about then we take a look at lower time frames and just point out a couple of little nuances, perhaps with the prices and the moving averages here, bringing them back on like we promised earlier on. And as you can see, the 200 simple moving average is getting tested on the 4-hour time frame all the time, with support coming in at around about this region. Now we can see that we've tested it again, and it's quite a ways away from our support. If we see a turnaround at this point, wouldn't be that much of a surprise. What we would need to take out towards the top side, the 50 simple, that's this red dotted line here, 50 simple, lining up perfectly with our resistance points, showing us exactly from a Fibonacci perspective, hide all the drawings, where the range is in terms of if we push past here at 56,138 sort of on a 4-hour time frame closing and open basis, going down to 54,500 thereafter and getting and hoping for a bounce there would of course be what people would be looking to. If we push up to 58,500 and then go beyond, sure, a little bit, that's like how we're talking with the 200, then you're looking for a profit taking to come in around about that 60,000 there, just shy in 59k region. Looking up at the top for that and at the bottom here for movements beyond these two zones, expressed fairly nicely by looking at the previous highs and of course the upward sloping support line. What we're looking for as well to coincide with this will be an increase in volume. So instead of it being these volume candles, which are all more or less in that territory, we're looking for something that comes up a bit higher like this in terms of to give us a signal of a breakout here. If it does push past this zone and we find that we get a retest of it and then move up, nice, that would be good to see. And that's the sort of thing that we're looking for on Bitcoin. Plenty of things I could talk about if I had more time. Don't have the time, but I will say that there's the potential for this low, when it does finish coming in here, when it actually confirms as a low, to be hidden bullish divergence so long as we stay above 52k. Nice. Subscribe to the channel if you like what you're seeing here. If you've got any value out of it, love to see you in one of these live streams, of course, as well. Like we're saying just here, drop a like and I'll see you in the next video. Okay, cool. So you can see that was quite taxing, if I'm honest with you. It's quite taxing for me to talk like that throughout the entire period. But I told you, I said you'd notice a difference. Well, you noticed a difference. I tried very, very, very hard there, okay? Tried very hard. Let's see if we get any sort of, if we get anybody, let's see if people like that episode afterwards, right? Okay, right. Cool. Rocky, for your Twitter, look at the titles you use on YouTube. Pretty much sums it up. Titles in the live streams. Yeah, I'll check out that afterwards. Man, don't get me started on titles for videos. God, it's really hard. What did I call today's video? Right, well, today's video is called No BS, No FOMO, No Greed, a unique technical analysis live stream. Right? That's what this is, okay? There isn't any greed here, or FOMO, or any of that. And I'm not trying to sell the glitz and glamour of crypto in order to sort of just ride that wave and everything else. I actually want to try and improve your life as a trader, and actually deliver some skills for you. Let's move on with the show then. Can I be bothered taking a look at these other coins? In fact, I'll just take a real quick. I'll do another video here, but it'll be a summary style video for the 3 coins I usually look at. I usually look at Tezos, Chainlink, and Ethereum in every episode, but I'm not that interested in doing episodes for those when they're getting no traction on YouTube. And people themselves aren't that interested. I don't get any rewards from the Tezos community anymore. I got one time for having done this sort of thing. And while I love the Tezos community, they know that I ain't going anywhere. And it's the fly by night characters that is essentially who I'm already really making the videos for. if I make them with such a degree of consistency and so educational. So I'm not sure. I think maybe it would be better for me to just summarize the three of them in one. So that's what I think what I'll go ahead and do right now. But to do so, I want to have a quick look. Oh, we're back below 2K, obviously, here on Ethereum, having pulled back down the wave since our profit take, since our thingy. Cool, okay. This line here, very clear for us. So there's that. Right? So what's Chainlink doing right now? $30 as well. It was up at 33, wasn't it? 35 even. Down here, came back down towards that 618 again. Okay, and Tezos itself 550, so it's dropped down a buck. Let's bring up one of these Tezos charts, and it's dropped down a buck as well. Okay, so what we're going to do is all three in one, and they're all going to be more or less the same, and I'll just make it up as I go along. Now, when I say, by the way, when I say to people, I'll just make it up as I go along. that's a paraphrase of I'm going to just go ahead here and share my experience with you as we do some TA together and give you a bit of insight into how somebody who's been doing this for a long time and who knows what they're doing would operate in this market. That's what I mean by I'll make it up as I go along. I don't mean that I'm like it's going to make it up as I go along. That's not really what I meant, you know. So stream marker, let's see if we can do something about this one. It won't be as good as that Bitcoin one because in terms of the episode, because I put all my effort into that. Then after we've done this, I'm going to take a look at GME, by the way, just so that people know I'm going to do that. In fact, maybe I should take a look at GME first. I'll take a look at GME just first here, actually, before I do that. Just because I know Trade Spotting was talking about it. Trade Spotting, just do this. Hey, bud, I'm gonna look at GME now, just in case. Okay, I'll do that first, and then I'll do the other coins, and then I'll head on. Do I want to make this into an episode? Not too sure. Really helped with the moving averages video. Hey Gank, that's quality. That's really good. That's really good. I'm glad I did. I want to raise the bar, dude, man. Yeah, I want to raise the bar a bit. That's it. It's like, you know, I want to raise the bar. I want to make it so that I want to be a thought leader on Twitter. And so when I look at Twitter and I see that it's all so thoughtless, you know, really makes me think. I mean, like, for instance, let's look up everybody's favorite sailor, everybody's favorite seaman, Michael Sailor, right? But he's not a real sailor. It's like spelt wrongly. It's a fake sailor, right? Let's see, like, from this guy, what sorts of, is he a thought leader? Bitcoin is a swarm of crypto hornets serving the goddess of wisdom, feeding on the fire of truth, exponentially growing ever smarter, faster, and stronger behind a wall of encrypted energy. That's probably his best tweet I've ever seen of his. Best tweet I've ever seen of his, right there. So, wow, shocked. Perseverance and spirit have done wonders in all ages. George Washington on Bitcoin. So that's bullshit. Right? Okay, so that's his next. What's his next one? His next one. Michael Saylor, Bitcoin is making dollar stronger and gold weaker. That's bullshit. See what I mean? It's like, let's just see the next one. In the course of preparing for my... Okay, that's actually nice of him. So, like, you know, this one here I saw at the time. That's really nice of you. Not at all bullshit. Right? Then here we go. Like, let's see. Where else has he said anything here? Because all he talks is complete white noise. It's just bullshit all the time. Where is he? Have I gone off his page? Is this now like... No, this is his page, isn't it? Who else? Name anybody else who's meant to be a thought leader in this field. If you don't understand laser eyes, you don't understand Bitcoin. Welcome to the team. Paris Hilton. Interesting. Lol. No price is too high to pay for the privilege of owning yourself. Roger Kipling on Bitcoin. Anyway, so like makes me feel like even when everybody in there, like all the thought leaders have got no brains, makes me wonder. That's basically why the only person I like on Twitter is Peter Brandt, and it's because he's a troll, and not only because he's a troll, but because he's a smart, intelligent, experienced, wealthy, 67-year-old troll or whatever, right? And it makes me laugh. So still looking at what we were looking at yesterday, trade spawn with regards to GME, we're seeing that it has had a little bit of negative pullback today. We've not taken out the potential shoulder of this potential head and shoulders at the time being. It's in this general region that we're looking for this to happen. Of course, this can be as ugly as it wants to be. This is just kind of talking about the levels. We're in this region of sort of 173 down to 160. So yeah, so we've not taken out that 160 today. That's very good to see in terms of the price action. And if we could move above this $217 area, we'd be going above the neckline of the head and shoulders here, pushing past the liquidity zone that we've already identified, which is somewhere between 180 and that $215 zone. A good chunk of liquidity in there, which we need to push past as a result of the recent consolidation. If we do get a measured move off the back of this one, I'm looking up towards $300, where we have our previous market structure high. This is the measured move, and it puts us in contention to actually continue the trend up the way. Currently, what we're seeing, of course, is that we are a ways away from doing that, and failure to do so means that we'd be coming in here and asking questions about whether or not we're actually changing the trend. As you can see, highs, low, lower high, higher low so far. So this is obviously consolidation, but this has got a channel on here, and you can see that this channel goes right through the gap which has happened in around about this particular short squeeze event, where there was, of course, a stop hunt on shorts. That's all that is. People like to dramatize it, but we live through this every day in Bitcoin. So this, of course, was just a stop hunt that happened, and of course, some people happened to get screwed over during that period. Well, that's life. Hard lines. Welcome to trading. Even if you are an $30 billion loss for some people in there, sucks to be you guys, but whatever. And what we're seeing here is that really there is a clear trend in and around this zone where we have highs really in here, organic highs taking us up to 170. Then, of course, the explosive top. Then what we saw is we pulled back down the way. This overall represents a 94% decrease in price when we came down to the lows. Then we've come up towards the highs again at this 282 area, down towards the lows in there at 117, and perhaps we're in a channel overall. If we do actually follow through from these patterns, it takes us up to the market key structure area, and we could look towards the top, where we actually say that if the prices come up towards $400 again, then the whole psychology around this entire market changes, because in this zone that I've marked out here with orange, you can see that that's that zone where that stop hunt happened at and caused the short squeeze for all of the over leveraged the shorts, essentially, whether they're over leveraged or not. And then, of course, that's why we had that extreme volatility in the markets. And that zone then is what everybody, the psychology is really the pain with this market exists in that psychological area. Taking that back out the way is the equivalent, essentially, in terms of Bitcoin land, of taking out, first off 10K at the key market area, then taking out the 20K high over there would be the equivalent in terms of the entire market saying, well, there was supposed to just be the one short squeeze. Now it's happening all over again, but it's happening with organic price action moving it towards the top side. That's the ideal scenario. Taking us up in terms of the measured move, if we do the head and shoulders measured move up towards the top side, then we're looking here between sort of $300 up towards $330, where we got the 618 golden pocket. Now, of course, that wouldn't necessarily happen right away. In fact, I would expect to see some consolidate or some sort of bouncing area happening here at 261 if we do make it up the way. A couple of reasons for that. Of course, the 50% line here right there, but as well because it would give everybody the idea that we're not going to take out our bodies of this previous high. Then, of course, we maybe see a bit of a retest, and then up towards the top side where we actually try having at this point taken out these bodies of the previous high, but not taken out the wick, meaning that everybody's narratives can still remain in place and everybody can be right, because ultimately you can draw a line down the way here and say that if we see inflection in around about these zones, that really we're sticking with the program overall in what could potentially be conceived as being a triangular pattern of consolidation here, which ultimately could go either way. The fair value on this stock is unknown. We don't know what its actual values are. The fundamentals have radically changed over the period of the last 6 months. It's actually just done a share issue, of which we've seen that the prices have actually not suffered as a result of the share issue at all. In fact, since the period of the share issue, the prices have managed to maintain themselves absolutely perfectly. We can see the current price here is $2 above the price that the share issue went through at, because it was 175. So things overall actually are looking far, 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 far healthier than everybody who wants to distance themselves from the meme stock idea is willing to talk about. about technical analysis, it becomes so much of a point of pride for a lot of people. And of course, everybody wants to be a part of a team, and they're looking for their own gang, their army, their nation that they can join, so they've got this feeling of correctness. And really, the theme in today's episode is to remind people that there is no such thing as correctness. Bandying up with ideas, just simply because you're looking to avoid the meme and everything else, is completely backward in terms of your thinking. And really, just looking at the technicals alone, where are we? Well, if I were to want to short this, just seeing that there's got a noise coming in here, what happened? Somebody tipped me. I didn't even notice. I'll have to check that out in a second. If we're looking at this from a technical analysis point of view, and you want to say, this thing here is just a short squeeze, and the short squeeze happened in January, and it's all dead, and you want to yap about things and be like that, and be big boo-hoo and everything, and try and make yourself look cool by slagging off Wall Street bets, which is really, really, really passé already. So anybody who's another YouTuber out there that's watching this right now, take a lesson here. Slagging off Wall Street bets to do with this thing here is passé. Get with the program, chaps and chapettes. You can slag off Wall Street bets as much as you like, but if you do that at the expense of looking at the charts, then you are, of course, worse than them. You're worse than them to do that. So looking at the charts here, then, if I were to want to go short on this, you put a gun to my head and you said, Rocky, you have to take a short on this. You have to take a short on this. I would say, well, could you give me just a second here? Because if the prices drop below 160, then I could happily short this with the basis of a head and shoulders move actually not working, looking towards two key targets, 120. That's, of course, a massive move down the way, just simply going between the right shoulder and the head, giving you 30% profit. And in fact, if I was to be just waiting for that to happen, all I have to do is wait for just an 8% move to happen to give me the confidence to take a 30% move, right? Much better. There you go. That's actually sensible. But what we're really looking at here is saying, can we get the full distance? Can we get the full measured move type of idea here for this towards the downside? Or can we move past this in some other way, which takes us down the way and breaks outside of this channel and brings us down towards these lows yet again? Well, yes, we can. And I want to just point out that, if you're going to be negative about price action here to do with this, just purely based off the fact that, of course, a group of people on the internet want to talk about this in a positive way, then really you need to bear in mind that we're looking at this as an overall market structure play here. This is your high, the body closed. This massive wick, if it's going to show you anything, is it gives you the idea that this was abnormal, atypical market conditions. And really what we're looking at is a high, a low, a higher high, and a higher low so far, okay? Don't be blinded by your own personal bias. That's what's going on with this chart here. So if it does shoot towards the top side yet again, you know why it's happening is because everybody who isn't trying to position themselves just for the purposes of getting more likes on YouTube or more likes on Reddit, everybody who's looking at this because they're professional and trading this with a lack of bias, a lack of emotion, a lack of greed, and the lack of fear and FOMO, what they're looking at, because they're not trapped in your bubble, is the fact that this could, of course, be trending towards the top side. What I want to point out is, of course, as well, the fact that this could, of course, just be considered to be like a brand new company at this point, having managed to achieve the overall value of the company in its share issue, while we saw bigger movements in terms of fear before the share issue happened than compared to after it happened. That's my thoughts on this one right now. Of course, that's me choosing a side. Part of why I'm choosing a side is because I've seen so much of people like talking out there about as if this is already over, and I want to point out the vast amounts of naivety to say that this is already over, while at the same time trying to make comparisons between previous examples of similar things happening in the past. The go-to example when it comes to this one is, of course, Volkswagen, which had a similar short squeeze event happening to it. Let me just draw into context for people who aren't aware of this already, by the way, that of course that we had this short squeeze back here in 2008 with regards to the price action. What did we see happen with the drawdown? Going down to our lows here. Ultimately, straight away, where did it go down to? 200 simple, 87% drop down. It took quite a while in terms of to get down for the full 95%. Let me just measure this out so that you're not blinded by my sort of enthusiasm. It took quite a while to get down a 92.5% retrace. Let me just measure this from the point there over to here. We're seeing 67 bars, 3-day time frame. So we're talking 180. We're talking 6 months it took to actually do the 94% retrace. And then afterwards, where did it go up to? Let's just draw on a Fibonacci here to draw the comparison, because everybody wants to think that there's a comparison to be made between VW and GameStop with regards to the short squeeze and why they're being so naive about it. Here you have the entire history of the Volkswagen stock here on the Euro Brussels exchange and Euronext Brussels, and what we're seeing is that it never made it past the 236 until very, very recently, when we actually got a big pump in the price of Volkswagen as a result of coming up here. And where did the prices go back down to and retest immediately afterwards? The 236 Fibonacci. Is that a coincidence in any way whatsoever? If you're a viewer of this channel, you'll know that in no way is that a coincidence, that this is absolutely, if anything's going to be called predictable in the land of technical analysis, well then let's say that this is something I think we could agree on as being fairly predictable. Now let me just draw that context back out for you in terms of GME and just show you so that you can refresh and take that sort of refresher on your perspective, the massive difference between these stocks overall. I'll hide all the drawings so I can see how the chart looks first off, just so you can see. I think that the point I'm about to make is very, very obvious to anybody watching along. Here's your high. How long did it take to get that retrace? Let me just see. Woof. Okay, it took 1 day, 2 days, 3 days. It took us what, 6 bars, 3 days. It took us less than 20 days anyhow, really, to take us a couple of weeks to do the 94% retrace, not 6 months. What followed on from that, of course, as well, is that we pushed up and we went up another 650% following on from the drops. Volkswagen in itself actually dropped from the drop. How well has it done? And how long did it take it? Well, I can tell you it took it 12 years or 11 years. And how well has it done? It's got up, oh, there we go, 471%. It's still not up as high after 10 or 11 years or whatever, 12 years, whatever it is, than GME is currently today, following on from that short squeeze. So I just wanted to bring everybody's attention back to reality here for a second. If you're looking at people out there in the world who are talking about things and they don't know any of this and they're not able to make any correlation between any of these things, hit the unsubscribe button. Don't bother wasting your precious life on them anymore. Thanks so much for that one. Right, cool. Hope you enjoyed it. Now go back to crypto land and we'll do my little summary that I wanted to do with regards to the 3 coins that I'm looking at right here. Let me drop a stream marker. Hi friends, doing a live stream right now. Join me for one of them one day. No. I need to start this again. At the very start of the show, by the way, at the very start, when I do the intro, I need to speak extremely slowly. Okay? At the very start, I need to. If I'm not going to do it later, that's okay, but hello, my friends. Ethereum, Chainlink, and Tezos have all acted exactly the same in regards to their price action over the last couple of days. We've seen them go up to high levels and then pull back down the way afterwards. 2 key areas to pay attention to. Is there anything that we can learn from this price action with regards to our key areas to look to for our next targets? I'll be revealing all of that for all three of those coins in this episode. As I run the intros here, just want to say likes, subscribes, comments, shares means an awful lot to me. By the way, it's filmed during a live stream as well, so make sure you come back and join me for a live stream someday. Okay, looking here at the chart. In fact, sorry, just I can't do the episode without. Thank you for being genuine, Rocky. You're the best, man. Drew's Tech, really appreciate that. Really appreciate that, Drew's Tech. I didn't want to do my episode here and not acknowledge Drew's Tech's contribution. Why is that not showing up? I told it to show up again. It probably will at some really inconvenient point for me. So I'm gonna have to start that. Again. Sorry, everybody that's watching along. I'm gonna have to start again. Maybe I'll make a better intro this time, right? Bring up the Ethereum chart. Okay, right. Okay. 4 hour time frame perhaps for this one. Idle drawings. Hello, my friends. Ethereum, Chainlink, and Tezos have all performed quite similarly over the last few days. We've seen a retrace in prices. Are there key lessons to be learned from this price action which might give us an insight into where would be a good place to take profit at on our next move with any of these markets? And can we learn some lessons by looking across all three? Let's attempt to do that right now. I would really appreciate it if you hit the like button. But of course, I'm really glad that you joined me for the episode here at all, and I just want to say thanks for that. And by the way, this is filmed during a live stream, so as you can see the comments down here. So join me for one of those one day. This is Ethereum that I have open right now. You can see the 4-hour time frame pulled right the way down, and we're below the 50 simple period moving average on the 4-hour time frame just now. This is Chainlink. We've pulled all the way down to the 50 simple period moving average just here, but we've not broken it. That's good to see. And over here on Tezos, we've come down, but not quite as far as the 50 simple. So 3 different scenarios just here. Ethereum pushed past its 50 simple. Tezos not quite made it to its 50 simple. Chainlink right bang on the 50 simple there as well. All of these coins haven't had a pullback recently of, let's see, in terms of percentages. This one, Tezos, significant 20% pullback. Chainlink, let's see, this one, significant 13% pullback, not as much as Tezos. And then Ethereum here, let's see, its pullback down here, 10%. So what we're seeing is that the coin which has had, in terms of the moving average, the biggest pullback, has had the smallest percentage pullback with its price action. The coin which has not made it as far as its moving average has had the biggest pullback in its price action. So while I said that they're similar, there also are some distinct differences here. What do you think? Let me know in the comments below if you think from this point, just from that point alone, if there's any signs of something doing better than something else, and what do you think of that relationship between the pullback, the percentage of the pullback, and where we saw the prices pull back to? Looking at the key areas for us with Ethereum, we knew that this price in around $2,030 would be significant, and we saw it operated for us as support just as soon as yesterday, as recently as yesterday. But today, when we came to that area, we crashed right on through down to the sub 2K area again. Is this a buy the dip scenario? Well, I'd like to think so. If we come down towards our other 2 key areas, then we'd be looking at the potential for a retest of this. Of this downward sloping line. What I like to think about with Ethereum is that this area on the 31st of March was that retest, and that we're flying on up to the top side ever since. Let's measure this slightly differently. So we measured it from the top in terms of just how far down did we come. Let's measure this in terms of how far have we seen the prices move with regards to our Fibonacci retracement points from the low on the 25th of March to the high on the 6th of April. And we're below the 236 right now. I haven't gone down as far as the 382, but not broken back up above the 236 yet. If we break back above the 236, it means we're on for some good potential upside. Of course, drawing in another Fibonacci, for example, and showing us that we are currently above the 236 on the move from the pull down. So we've done a little bit, but we've not invalidated this Fibonacci quite yet. And if we went for the 618 golden pocket, well, it takes us all the way down to those areas we were talking about before with regards to where this downward sloping line is, our previous low, etc. And we're looking at that sort of 1700 area. But if we find a bounce from here and can push past $2,000 again and take out the 236, $2,020, then perhaps we're making up for some lost ground over there, and we could look towards higher targets. So what are those higher targets I'm looking to with regards to pushing past the 236 and taking out and invalidating that other Fibonacci? Well, first off, looking towards $20,084, but then actually my next target is going to come up there somewhere between $222, somewhere between all the twos, and $2,000. $320. Somewhere in this region will be my next profit taken target on that one. Looking on the way then with regards to the Ethereum price action, doing the same sort of a thing as what we did with, or the Chainlink price action that we did with Ethereum, pointing out that we are below the 236 here. Taking out 32 could then see us going towards the top side. What are my targets with regards to that, just as a general point? Up here towards 37, somewhere between 36 and $37. If we're able to push past the 236 at 32, then of course 33, all the threes, 333, 33, and then of course then the previous highs as well. Over there with Tezos, what are we looking at with regards to how far down we've come? Oh, sorry, just I forgot, I overlooked. If we do push on down the way and we're looking for a fulfillment of one of these lower areas, the 618 on this comes back in at that $27 region, you know, so that's where we could be seeing a bounce at. Wouldn't be surprised if that did happen. Overall, in terms of just, you know, zooming out and looking at the markets and saying we've had a lot of volatility recently, and that wouldn't be too much of a surprise. I don't want to see it happening, but I'm not going to start getting super positive until we break back above that 236, okay? And with regards to then Tezos, this is, of course, strongly trending. Now they've got all this in here, doing a much better job than, for instance, Chainlink with that trend, or perhaps Ethereum with that trend. What we're seeing is Tezos is having actually done just, you know, a bit better recently, which means that when we draw in this Fibonacci retracement tool to take in from our lows, are we looking between these lows down here, or are we looking more closely at this? So I'll just draw in both of those so you get the quick example from it. Oh, here comes the noise. The 236 at this on this one is at 585. I'll just mark that off because well, I've got it in my vision in here, and then and then from the lower area, you'll see that it's not actually massively different, actually. If we take it from just here up to the highs, you'll see the 236 is in there at $6. So we've got a range here between these two zones, and that's what I'm looking to with regards to this one is going to be in this zone just here. Instead, let me remove that from the charts, and that's what it is. So I had a laugh in the past when I said looks good from up here in fake out territory. That was ironic. And as you can see here, we've dropped back down the way since, and we've not come as far as the 50 simple moving average there. We have, of course, broken down past that one line there. Don't need that on the charts anymore. So this is our key regions. Can we move past this zone? And lo and behold, we can see there's that in this zone, this is where our wicks have come up to so far today. Where we're obviously having these dojis on these 4-hour candles here, and we're considering this zone and where we could go next. If we do go towards the downside, then the 618 Fibonacci retracement tool. We're going to have to go back so many undos here to find the 618. Yeah, it's coming in there at 480 at up to 493. So that's not a surprise at all. That's not a surprise at all. That's what we're looking to. 480 if the prices continue to go down the way. If they take out 580 to $6, then we're looking up the way. So what's our price target like we did in the last two coins? We'll just draw in this real quick. Now there's various ways of coming to the same conclusions. This is just a convenient way of doing it for you. 720 to 770 is the zone to be looking to if we can push past, of course, 580 up to $6. That's what we're looking at. We'd love it if you came for a live stream one day. We could look at things that you want to talk about and put the episode in a way that will really help you. So be there, do that, and we'll do it one day. It'll be a good laugh, and I'll see you again then for that. Right. Okay, so I've done all the main coins I'm going to do. Let me just see here. We've had a couple of people talk about an hour and a half into this. I'm going to just finish off then, I suppose, with looking at the looking at Litecoin. I was going to look at Litecoin and then see if we can have we're going to look at Litecoin, see if anybody else is desperate for anything else to be looked at, which we can look at. And I'm going to catch up with the chat real quick here because I've missed a bunch of chat. I love you guys, right? I'm going to actually, while I look at the chat, I'll bring up the chat box so it's on the live stream so everybody can know that that's what I'm looking at as well. Groovy. And I'll bring up the Bitcoin screen as well. So actually, no, I'll bring up Litecoin so that we have what we're going to be talking about on screen at least. What exchange is this? This is Coinbase. I've got open here. Litecoin on Coinbase. That's the 4-hour time frame. The analysis I just did there now is quite simple, right? It's nothing mind blowing. We're looking at the low that we had recently to the high that we had, and saying that there's the 236, and we're straddling the area between the 382 and the 236. When you see that happening, you know that you're probably in and around about the 236 if you were to measure it down the way. So obviously for everybody that's really optimistic, the 236 is coming in there at 218 and we're at 220 at the minute, but we're waiting to see the bigger sort of Fibonacci where we're really defining the range right now with our wicks, for instance, where we're this to actually resolve for us, right? That's what we're looking for. That's why I'm looking at it in those two ways, you know. But I am interested in seeing then for the upside targets where they're going to come in at, and that's going to be up towards there. For anybody who's super interested, 253 to 265 would be your upside target. But of course, I'm looking for it to break at solidly 226 before I'm going to be enthusiastic about that. And I'm aware that I'll be taking profit at a couple of key areas. So just to put this into context, you know, if I was trading this myself, I'm looking to see if we can get a break above that zone. I'm saying that I want to have a risk to reward of whatever. Now, I'm used to trading with around about sort of 5 to 1 risk to reward. So that's more like what I look to. And I know that that seems extreme for people, but that's what, you know, when you're at it for a while, you can aim for this. If I was other people and talking to a newer trader, I'd be more like looking for a 2 to 1. Now, is this necessarily the move that I would necessarily take? No, not necessarily, but I might be managing my risk like that. And also be inclined to probably move my stop into profit, bearing in mind that, of course, this is very much bearish, very much potential risk zone, but we're not bearishly divergent. I'm happy to take that trade. We're not bearishly divergent here. I'm happy to take it. I've got that stupid cipher thing on, by the way, if anybody's interested in what that is. We're not divergent on the MFI either. The DMI is not divergent. Got Rick and Morty lips as it looked like it could come in for a cross, but it just managed to avoid it. So moving up past the 236 is going to give us that, you know, resumption of where we were before, a rejection of this being a cross, yada, yada, yada. This actually crosses and this, you know, descends and continues down the way. It's in a strength of trend area. Then, of course, I'm looking if, you know, breaking the 215 area, I'm looking down towards, you know, 194 as my next entry for us. Like if we do, and that's a simple enough way of looking at it as well. You could just do it from a moving average perspective and say that we need to maintain above the 50 to maintain this golden cross in the 4-hour time frame. Of course, if we go down below that, I'm expecting a challenge of the 200 simple, probably wick down below as well, at least to try, you know, do see something. Curious area with a VPVR in terms of liquidity here. So, you know, we would be hoping to see that there's some sort of you know, that there's some sort of support in here. We could go as far down then as sort of the 190s area, and then, you know, maybe find support at that point. Overall, I don't want to break the previous low in here at that price just there, right? There's your TA for this one, but I'll try and make it into an episode again, sort of 1 minute episode for that one in a second. So cool. Nah, I don't like that much either. Can you do 140 character TA tip of the day or something like that? People put out a lot of chart pictures and ask interpretive questions. Maybe that is your angle. Yeah, maybe it is. Rookie XBT and stuff like that. I've got tons of followers. You know, what they'll do is they'll say, if this was Rookie XBT and it was on Twitter, what they would do is this. So let's just do it together real quick and we can see if it works well for us. Let's do this. Let's do this. So what we're going to do is this. Let me remove the noise. It needs to not be too noisy. I'll remove the moving averages for a second, and then we'll take away that too, because of course we're talking about trading within a range and being sensible. So what we'll do is this instead. More Peter Brandt style classical technical analysis, if you want. They like to do things that are a little bit confusing. So what I'm going to do here is I'm going to put in an extra line, right, like that. So this is meaningless, but it makes it look like there's meaning for people. So that's great for Twitter. What will I do as well? I'll put in a red box. Red. Put this here as being red. Make sure it's red. That's the wrong thing. I'll just leave it as orange because I've rapidly ran out of energy there for that one. Oh, I want to hide my pitchfork. It's in the background there. This purple line, that is a previous profit taking target. So we know that it's profit taking targets, but really I'm going to remove that as well. Look down the way, look up 1618. Put in a line here and call it profit taken. Remove that from the screen. There we have it. Aha. And there you go. Picture. Take the picture, copy, and then go Twitter. That. And you say, what is this we're even looking at? Litecoin. What price was that? 240. Where's the target? 300. Cool. 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 300 buck target on this move. Litecoin and something like that. I don't know. Wait, no. LTC. Right. Now that there is the sort of thing I guess that I should be doing all the time on Twitter. That's far better. I think probably realistically it's far better than what you're going to find other people doing. Really, that's actually quite decent. What I just did there is quite decent, even though I was being fairly flippant as I was putting the language together for it. But that's, you know, that's what you're saying maybe I should be doing there, buddy. So I just did one together. Join with us live with Rocky Outcrop on Bullshit or Not Bullshit. You should have some episode on this. Maybe I should. That was me looking through tweets that other people were saying and saying bullshit to them. Every time I hear GME, it breaks my heart, of course, but hopefully I did a little bit of a band-aid for you. Aloysius, good name there, by the way, buddy. Can you check OMG? Can you check OMG? Can you check OMG? Can you check OMG? Please, 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 please. Maybe I'll check it. Depends if I can, because maybe I'll check it. I'm tired though, like Tradespot says. Gank says thanks to Tradespot. That's nice you're having a chat there. So Signmark, yeah, cool. Let's chat. And we're brothers, blood brothers, buddy. Actual brothers, not blood brothers though, because that means you're not brothers. We're actual brothers. I was sold 20 stocks of GME at $60 because I was so sick of it. Now I regret it. I see. So that's the pain you're talking about. Sorry about that, buddy. That's cool. That's cool. Everybody's getting along well there. Craig, Litecoin, is that an A&E on the Litecoin chart looking at? What do you mean A&E? Sorry, mate. Accident and emergency is all I can think of right now. Signmark official 5 million with 19. That's crazy. Right, so I've caught up with the chat. I don't know what you mean A&E exactly. Just tell me what you mean by A&E, because I feel like I'm being stupid with me not realizing what it is you're talking about. By the way, you'll notice that I didn't put the profit taking target. Like here's a quick lesson for folk as well. Like, look here, what's this? What's this? That's the measured move from the ascending triangle. What's this? That's the full target. What's the difference between the top and the bottom? If you've watched this entire live stream, you know what's coming. There's the 60% move. Somewhere in this region here is where your profit taking target is going to be. Remove that from there. Obviously, in here is where you would expect to find a degree of profit taking having happened. Of course, the overall measured move target comes up as high as what, 350. So we're at 350. As there's the measured move target. Two. And this is 1618 fib and textbook measured move target. Cool. So that's what that is, just so that people know. So you've got the actual sort of like idea about it and why there's that and why it's more sophisticated than your average your average. Adam and Eve, right? Yeah. Adam and Eve. So Adam and Eve double bump. Thanks for that, by the way. I knew I was being stupid. No. You're not making up your own language. That's fine or whatever. Adam and Eve. That's fine. It's just whatever. Hey Rocky, why does your fib retracement tool look different where it shows the golden pocket? Oh, okay, right. I'll get back to you in a second, Craig. Just answer this one real quick. So you can see here, I've got the golden pocket here. I added it in. You can add it in anywhere. There's no order to this. I've seen people like Tone Vase had a guy as a guest on his channel, and the guest on his channel is like wanting to add a level onto his Fibonacci, right? And he's there and he's typing and he's all like wanting to add a level into his Fibonacci. And he's worried it's not going to show up in the right place because he doesn't have it listed. So what he's doing is he's like trying to get room. So he's like, I'll change the one. I'll have to change the one to here to pick it. So then, anyway, sorry. So I added it in at the bottom, and it's 0.65 right there, and I mean I don't know. It's just because I've added it in, right? I think that's probably you're used to seeing it like this in the background here, just all smooth and laid out. But then there's two levels, and you just add in the number down the bottom, and to add that in, go for 0.65. If you can choose your own number. For example, Peter Hure, good guy, good friend of mine here in the chat, he chooses 66. I think he does. I mean, it's up to you. It's all good. You just look at what you just back test things. Look at whether or not what you're thinking is correct, and that'll help a lot. And then when we had Adam and Eve double bottom, and what were we talking about there? Is that Adam and Eve double bottom, the Litecoin chart we're looking at? And an Adam and Eve double bottom. Let's try and see, right? Adam and Eve double bottom. So Adam and Eve, right? So for people I need to expand this out for everybody else that's watching it. Adam and Eve. Adam and Eve. No, that's the wrong. That's obviously that's not from trading. Oh, Adam and Eve is an Abrahamic religion. Oh, is it what Abrahamic? An Abrahamic pattern. So an Adam and Eve pattern here. Let me just get up the old images instead of going to any textbooks or anything like that. What we're looking for is that's not one. This is not an Adam and Eve pattern here. That would be Adam and Eve inverted bottom. So that'd be an inverse Adam and Eve, right? An inverse Adam and Eve. Okay, so that's like just does it say it there? It doesn't say inverse on that picture. Just wanted people to know, like, so that's inverse because we're looking at it following on a down. Then it goes for an upside. Then you got an Adam and Eve. There's an inverse one as well. Here's an inverse one as well. Here's an inverse one as well, right? Here's an inverse one as well. So back over on the charts, when you're saying, is this an Adam and Eve bottom? What you're looking at is not this region. It's not that and that in terms of those triangles. Rather, it's that and that, right? That you're looking at, like that and that is what you're trying to say. It's not ideal, right? It's not ideal. Reasons for it are that, you could so easily look at this as being an Adam and Eve top, right? So let me just find a couple of top examples. Here we have Adam and Eve on a top, right? So just looking at the chart real brief, zooming on out the way and saying, hey, is this an Adam and Eve bottom? You have to imply some of your own bias to the chart to not see this as being more like this idea than it is like this. It's less like this Adam and Eve idea here, with this distinct part here. This was wrong, by the way, for anybody looking at it. It's just looking at this chart and realizing what this is. This was wrong for anybody back in the day. So Adam and Eve, how successful are they any given time? It's similar to Head and Shoulders. You're looking at sort of 60% failure rate on them. Anyway, so I would say no, but it doesn't really matter because you could look at this as being a W if you like. Tony, for instance, one of the nice Rocky Outcrop.eth friends of mine, loves a W. He'd maybe say that this is a sort of W pattern. You could look at that as being an Adam and that being an Eve, but it's already failed with the result of this price going up towards where it is there. You could try and say it's at a bottom here, but this is the 4-hour chart. It's like there's no Unless I were to go right down to a really small time frame, the 1 hour isn't even going to be enough to be small enough for this. Then what we're looking at here, I mean, is there anything that jumps out? Is anybody watching this as being like Adam and Evie in terms of the troughs being Adam, in terms of is this Adam's head and this Eve's head? Is it in terms of what we're looking at, or is it more likely to say, if you had to, that was Adam's head and that's Eve's head? Right? This is narrow, this is fatter. This one here, they look more or less the same. Let me just measure it out. Yeah, they're the same anyway. So in terms of like Adam is meant to be, because you can get Adam and Adam, you can get Eve and Eve, and you get Adam, Adam, Eve, Adam, Eve, Adam. So this is Adam here, and this is Eve here, and it's failed so far, right? That's the better way of interpreting that one. Cool. So I've done the Litecoin technical analysis. It's just not made it into an episode. And I've caught up with all the chat. Where does Tone find these guys he has on his show? I don't know, man. I don't know. I think they're people who paid him money in the past. It's just the same way as Eric Crown. Eric Crown, love the guy, great guy. The people who are on his show, on his podcast so far, have been people who are part of his trading group. And loads of them have got different opinions to him, operate differently in the markets and all the rest of it, but they're part of his trading group. So maybe they're sort of Tony Vase trading group kind of thing. I don't know. Okay. Okay, let's do a Litecoin episode real quick for all the Litecoin folk back home. Then maybe I need to do some meme coins. So I'll take a quick look at OMG and a quick look at like Anchor or some shit like that, so I can get some sort of views and subs. Because I need to keep getting subs on the channel, or else, you know, whatever. No problem, Craig. I'm glad I was able to help you. If I just delete this and delete this, I can use the undo button in a second here, which is handy. To brighten my face up. Oh, screen marker. Hi friends, Litecoin, has it got the potential to rise all the way up to $300? Well, I'm here to tell you that it does. We can see on the charts beside me here that there's quite a bit of work already gone into making this presentation for you. So why don't we just crack on? Really glad you decided to join me for this episode. If you hit like, that'd be awesome as I run these intros. There you have it. You know, you've got another 5 seconds. Just move the mouse over, hit the like button, hit the sub button. There, I'll wait. I'm patient, I'm waiting. Okay, I'm back in here. And by the way, this is during a live stream that I'm filming this, so join me for a live stream someday, okay? So you can see the chat there. Join me for a live stream someday. So what we're looking at with regards to Litecoin just now is whether or not we could be making our way all the way up to that measured move target number 2 as high as 350, but also the $300 target in here, profit taking target, the 1618 Fibonacci, and the textbook measured move target. The measured move being off the back of this ascending triangle, and textbook telling you to be taking profit in it around about this zone where I've marked it out with this orange box here, okay? So of course, if you want to take profit just shy of that target, then $299 or something like that. I'm not a financial advisor. None of this is financial advice. But if we're just in this area right now, what could we be doing? If we actually break past this right now, what could be the impetus for it? And I'd maybe point out that maybe the impetus, if we were to break this, would be if this was to be a failed Adam and Eve pattern. So here we could have Adam's head, and this would be Adam, and this would be Eve. So I'll just draw it in here. So you have Adam in here, and you've got Eve in here, and you can see Adam all thin and Eve all fat, like the way they want it. And it's failed, you know, so far it's failed, and we've come up to our highs previously. So if we were to push outside of this consolidation zone right now and go up the way towards our target, it would possibly be off the back of a failure of a pattern. You know, and a pattern failure is as good as a pattern completion, you know, is to say, or not completion, but confirmation. Confirmation is as good as failure if you're trading patterns. However, I want to urge caution on this one, because of course, if we do move up the way, we can see in terms of measuring out our sort of consolidation area here, that if you go the full way, it's 100 or 735 bars on this time frame. If you come up to where we are now, you'll see that we're 322 bars into it. So we're like 50% of the way into this pattern, and really the breakout zone for it would be in more like in around about this area, which means that if we were to drop towards the downside, what's our ideal buy entry for us really overall? And that's coming in here in this orange box, and that's somewhere between 187 and $200. Okay, so I know that in the initial part of this video made it look like, you know, we're just going to fly up there right now. Well, we could, okay, we could. However, we also could very much find ourselves getting a really good discount on our Litecoins, you know, and that's actually a huge discount, talking $40, $46 off the price of something, which is $240, you know, big difference. Now, we've had successful pattern moves in the past off the back of this, and that's all very, very good, and that's good to see. We can see that we're not bearishly divergent in this area, and right now the key consideration thing for me on the 4-hour time frame is going to be the DMI, and if we see a negative cross spelling us going down towards that $200 area, or if in fact we can see this reject from the potential from across, currently it's doing Rick and Morty lips. Will we see this actually, you know, reject then, therefore? It would be lovely to see it and go up the way and actually capitalize on the strength of trend, the lack of bearish divergence, and front run this pattern towards the top side. Now, when you front run patterns, you don't get the full move necessarily off them. Here's a quick little tidbit for anybody, by the way. You often wonder, why do we talk about the 60% measured move, target, etc. from the textbooks? Well, as you can see here was a pattern in the past. This is the measured move off of it. Here we went on and we actually went way beyond it. But if you look at around about where the halfway line of this pattern was, of course, this is where we saw profit taking coming in at the first time. So if you are looking to trade this rapidly, then you always want to know where the 60% area off of a measured move target comes in at, offering you up a 10% discount on any potential move up the way. There you are, living your life as a swing trader, loving it and doing a fantastic job. Therefore, if you're looking at the same idea, the overall high from it takes us all the way up as high as 350. We could see some inflection in there. If we saw a pullback of those lines, what are we looking to? Well, perhaps a pullback down towards this area here. We have the 382 Fibonacci retracement coming in there on that one, which is a little bit confusing to me right now. Let me just see, why is that on the charts at all? Is this just a Fibonacci retracement that I've moved by accident? Okay, that shouldn't be there, but roughly, actually, funnily, it's funny that I've got that there. I'll just remove that real quick. But I don't know why that was there the whole time in this episode. I'm not going to refilm it though. But yeah, what you'd be looking at is a 10% sort of discount from this area, perhaps, you know, with the prices coming back down to the 275 zone before perhaps going up towards 350 thereafter. Let's just draw it in here so that we've got an idea. If this were to be the case in the future, we can check back on it and see how it's going. Follow me on Twitter if you like, rocky_outcrop. Definitely hit the like button if you got any value from this video. Come back and join me again for a live show sometime, and subscribe to the channel, hit the bell so you don't miss out on any of this amazing content that I put out on a very regular basis. Right, cool. Everybody in the chat still totally satisfied. And now I'm going to go on and take a look at Omi's Go or some other coins to try and like grow my audience essentially, and also to help the people. 550, $10. We made it to some targets on this one. It's been a while. Been a while since we looked at this. Let me just get rid of my brush marks. As you can see, that parallel channel in the background obviously not functioning in terms of the range, you know, but it certainly shows you the overall kind of direction in the market. I'm not amazed. Oh, it's not on logarithmic. I'm not amazed by the positioning of that thing. I'm not sure. It must have been off of some smaller term time frame. Definitely not here because I've not looked at this thing for quite a while. So I'm not sure where that's coming from. Get rid of it. That's another thing, by the way. Horizontal lines are much better than diagonal lines just in general for folk. How have we done? That's the first question to answer with regards to me. Actually, let's do this as an episode because I don't have time to be doing this twice. So bear in mind, by the way, that I'm making it all up as I go along. Oh my god! Hi, friends. let's do some analysis on Amaze Go. It's actually had a good day today. Looking across the markets, a lot of red on my list there. Actually, it's behind my head. That's annoying. Also, I've disappeared off the main screen as well. That's weird. What's that all about? Hello. I'll start it. I'll just do it here. Hello, everybody. Amaze Go. Amaze Go. OMG. Oh my goodness. Is this coin going to keep flying up in the face of the rest of the market kind of suffering? If I pop myself off to the side and we look through my list of coins here, you can see there's an awful lot of red on the day here. But Amaze Go is obviously doing very, very well. Nice to see that. Let's analyze this thing, find out key targets to be bearing in mind if we're going to continue the thrust towards the top side, find out some key profit taking targets, do everything that we really need to do, and come away with it with a little bit of education and a better understanding of where we've been in this particular market. Fantastic. Everything that you basically would need to know if you want to be a really cool cat in terms of your trading. As the intros run here, I'd invite you to hit the like button. It really helps the channel a lot. It helps it so gosh darn much that I would really appreciate it. And join me for a live stream someday. As you can see, this is filmed during a live stream. If you're here for a live stream, you get to ask me questions, etc., and all that. Okay, so you get this. So join me for one day, right? Make myself nice and big again here, and talk about a couple of key concepts. So if you're looking at this chart here beside me right now and thinking, "Oh my goodness, the candles are too small, Rocky. You need to zoom in a wee bit." Don't panic. What we're doing here is taking a look at a macro. Come on, brighten my face up. A macro look at the charts right now and trying to see where we've come from just real quick. And I'm going to take a Fibonacci tool from the high over here down to this low here. Now, I'm not sure if this is the entire history of this coin or not on Binance. It might have been traded elsewhere first, but I'm going to just look at this key areas in the market. That's an obviously key high, obviously key low. Where have we come from since? And I like to look towards the 1618 Fibonacci retracement point as a general target. So I'm actually going to drop a horizontal line here on top of the Fibonacci here, just so I know where that actually is in relationship to the price. Now, if this doesn't look quite like your chart, maybe it's because you've got yours on linear. I've got mine on log, but I'm using my Fibonacci's with actually this button checked here. Fib levels based on log scale. So actually, are the same numbers that we're talking about. So I drew my line in at the 1618 in there at $14.50 for everybody following along. Right. Cool. Excellent. Remove that from there. We're done with that section. But what could be your next profit taking target up afterwards? And another really good way of doing it is the exact same thing there, looking between our next two really significant zones. Don't think it takes a genius to figure out that $10 area down towards this $2 area with this 80% retrace between these two zones is super important. And what we're seeing right now is the prices have been up above that so far today. And where are our targets? Well, the 1618 is up here at the $26 area. Notably, the 1272, the first of the three targets that we really look to, which we have already taken out from the other Fibonacci we had on before, here in this instance lines up with the 1618 nicely, giving us this great big profit-taking zone up above to look to. That's going to be a key area if we keep going up. Excellent stuff. Zooming on in a wee bit and just taking a look at where the price action is right now. In fact, actually bringing that Fibonacci back on so you can see that right here where the price action is right now is just in at our previous high. Okay, so we're just at that 100% area. If we see a retrace from here, what could happen? What's typical of happening, and then therefore where would be our good rebuy areas if we're talking about BTFD and looking to buy a dip. And that comes in here at $7.50. I know, shocking, isn't it, in terms of percentages, what we're looking at. So this would be a 30% drop off in the prices, and that might be your next best buy area if we see a retrace. Now, what I'm going to say is, for the folk back home doing this, if we see prices go up any further, just continue dragging your Fibonacci tool up and look towards where the 236 is. And there's two targets, going to be the 236 and the 382, and that's going to be for you to kind of decide. If things obviously don't take out the wick of today, and that ultimately is our high, then that means 750 is that target. Now the 382 is in here at 58, and I don't want to see a 50% retracement, although if we did, we can see that there's various areas here in terms of support and resistance that makes this super crucial. In fact, I don't even need the 618 on here to show you this. I can say this wick here, this wick here, this wick here, this wick's here. So we know that there's a zone in there where the prices could ultimately go to in at this 50% retrace area, and let's just call it in here at around about $4.60 or so. Now that's going to be the cutoff point for me, with a zone going all the way down towards the 618 Fibonacci area to say that this zone is going to be important. Now, why is it? Not because of the 618, it's not to do with the 618, it's not to do with the 50% retrace, why I'm making this particular point. Just that's where that lines up with. But why I'm saying that's significant is because that if we look at this wick here, we can see that's actually our key market structure area, and we have two of them, okay? We've got two of these, this one here and this one here. Now, the difference between these two lows is that if you look at this and say this is a high, this was a low, and then this is our high, actually this here is just flux along the way. It's not actually a higher low. It's just noise, actually, that could convince you that you've got a higher low in there when you don't actually, and also could convince you that you've got that real proper significant support area when you don't necessarily, giving you that, depending that you're at the will, you know, you're at the whim, operating at the whim of the bigger fish necessarily in this zone here, and that's the risk that you're operating in. So what that really translates to is that if we do see any pullbacks, what I'm looking to is not to try and catch the knife, rather to actually try and buy it on the retracement towards the top side, okay? Not financial advisor, not financial advice, but that would be how that would work. And that happens for all of these as well, because we don't know if the 236 in here is going to be respected. We could see it coming all the way down to the 750 or $6.90 area and then back up, and it would be on the recross of it that I'd be more inclined to want to enter into any positions in around here. Anyway, what have we done? For a quick summary then, is we've actually come up with the next two key profit taking targets. That's $26 and $14. Okay, that's what they are towards the top side. Very, very, very high. Of course, if you take it off log, you can see how that is. But that's the excitement of this bull trend that we're in overall, and that's what to look to. But we've also talked about key areas to be aware of, and the fact that we could be about to see a 30% retrace on this one overall at some point, having come up here and challenged that high. Let's just sanitize that real quick by taking a look at our RSI, showing us that we have actually got bearish divergence. It's not just once or twice, but was actually here across the board. We've got that bearish divergence for quite a while. The MACD, on the other hand, doesn't show us that bearish divergence. It's really nice that we've got that continued upward strength. In fact, we are also seeing that we've got, in terms of the MACD, this hidden bullish divergence in here at the previous low area before we rose up the way. Perfect, giving you that perfect buy. That was really lovely for people if they were buying it on the 25th of February and they noticed this hidden bullish divergence. And then indeed, if they bought it once it already started to break past these key areas. So we're seeing all of that on the go. Here we have the MFI. It's not divergent either necessarily, but the RSI is giving us a wee taste that it could be. So that's just the warning for us. Overall, of course, I'm very, very happy with the price action. Just want to point out again that the sort of the second J. Wells Wilder Jr. Oscillator I use here, the DMI, has of course got that divergence on it too, but that's premature to say so. We would need to have a pullback, and to have that pullback happening, you know, that would be us taking it. We'd need to see us coming all the way down towards 660 to say that either of those were divergent at all, you know, to be able to say that that was happening at all. So far we're not there. It's just, you know, we just need to see, can we keep going? At some point something's got to give, and when it does give, I'm looking towards that 236. So we've walked through some education, some targets, some key profit targets. We've looked at oscillators. We've talked about how you could manage your position if the if the prices keep going up and you move your Fibonacci up the way. Talked about quite a lot in this episode. Not been that long, so I hope you got some value from it. If you have, and you didn't hit that like button during the intros, then go on, please do it. It would help me out an awful lot, and I put a lot of effort into this, and I care deeply about my audience and my relationship with the audience, and I really want it to be positive and healthy, and I'd like it if you were a part of that too, and you came back and all that stuff. So, you know, look, trying over here, and I'd appreciate the like, so thank you. Right, so one last shitcoin. Right, not wishing to be rude, when I zoom, I tidy the area behind me. Great stream, many thanks for your time. Right, okay. Phil, hey Rocky and friends, I got to run thanks to the TA session. You're no problem, by the way, no problem. Right, cool. That's a good idea to tidy the area behind you. Now, I leave it on the show. It's really good for going back and kind of auditing yourself. Also, I'm not too bothered when I'm doing this myself. I leave these on between shows. Most of the time, this type of crap, just so that we can do all of this. And when I zoom in on an area and you want to clear up the area behind you, well, it depends. I know that there can be a lot of noise at times, but like looking over here and seeing this descending triangle that happened at that time, and then saying, "Did we get the measured move?" etc. It helps. It helps. It helps, and it helps me like hardly any, but it helps a lot of people who are watching along. Especially since some people might have only watched an episode back here in November, not watched the channel for a few months because they hoped it would go up. It went down. They got burnt. They come back in again. They get reminded of these experiences. They see me drawing a new pattern on, and they think to themselves, maybe I should pay attention properly next time, etc., etc. So that's kind of the way that I do things, but I do realize, of course, leaves a mess on the charts, if that's what you're meaning. Right, okay, so final sections of this stream, essentially, final minutes, I suppose. Now we're 2 hours, and it's twice as long as streams, twice as long as I wanted it to be. So I am determined now to finish soon, okay? But I want to do one more crappy coin so that I can not crappy coin, sorry. I want to do one more coin so that I can have a chance of like canvassing more people out there in the world. The way that YouTube works, by the way, is that I put out a video and I've got however many followers. A proportion of those followers watch it, talking like 1%, and then YouTube's like, not all of your subscribers actually want to watch your Bitcoin video, so then it doesn't get promoted, and then other people watch it. They're seeing, it's highly, highly competitive world out there. So I want to find more people who are interested in crypto, and I can only really do that by trying to look at coins which are getting, or like the coins of the moment, if you like. Maybe I'll look at Kusama. It's popular. I should really do it. I was asked by somebody to look at Sol recently. I should look at Sol. I was asked as well at the end of the last live stream. Somebody asked me to look at Sol, so I'll do that one. Right. Okay. Cool. Wow. Well, they were right to ask me to look at Sol, weren't they? Looking at that chart, weren't they? This is different to other ones. We can do the same Omi's Go type thing that we did before, but you'll see, look, we've gone past the 1618, came up here, inflected around this area, found support right on that line, funnily enough, then moved on up the way since. This overall here as well, this is March lows, right, or December 20 lows, of course, the altcoin area low, sorry. And yep, at the 236. So what you're seeing here is that if you were to combine Fibonacci's together, which I like to do quite a lot, if you were looking between these two areas and saying, oh, the 1618, that might be significant, then you see bang on there to within so 1288.47, 1286, 12. So you're so close there in terms of these two. You'd be thinking to yourself, maybe that area is significant. Now we're thinking to ourselves, this area is significant, and we obviously know that it is. Taking out that area, I would say, is taking out three things: one, the 1618; two, the 236; and three, this area of support, which would then flip to become resistance, and you'd be looking down towards this target over here, I would say, then, because you'd have this sort of the pretty strong chance of coming in for a decent move down the way on this one if it were to be the case. Okay. Oh shoot, I forgot, I'm supposed to be making this into an episode. Right, stream marker, and try and get anything out there. Anything at this stage, anything will do. Anything will do at this stage, I think. Hi friends, Solana, Sol USDT, Sol SOL. Is it Solana that it stands for? I think it is, right? Sol. That's what we're looking at right now. A couple of key areas for us. We can see the 236 Fibonacci is coming in here at $12.86. If we were to see a retrace down to this area and break it, we'd be breaking market structure. So that's one thing we'd break, our previous low. The other thing we'd be breaking as well as the Fibonacci points. So that's 2 for 1 that we'd be breaking. And then I would expect, I suppose, to use that word loosely, a move to go down, perhaps taking us down as low as 320, maybe finding support at 535 along the way. But of course, you know, this is extreme. And what we're looking at is, of course, a very, very positive trend towards the top side. So that's like the negative story out of the way already. Let me talk about the positive aspects of this thing. And I'm going to do it by bringing in a Fibonacci from that top to this low here and pointing out the fact that the 1618 lines up with that 236. And that's interesting and useful and good and good to know. But what we're actually seeing as well is that the high on this one, the sort of the next area up, if you're going to push past the 1618, going up towards that 2.24 is in there at 35, and that's going to be your next profit taking target from where we are right now, or one of anyway. So let me just see if I can establish a couple more reasons for that without those Fibonacci's on those particular Fibonacci's on the chart just there. Have we got a 1618 that operates, you know, anywhere in around that region from here? That's where we're at right now, the 2.24, or it lines up with the other 2.24. So that's definitely right. Somewhere between 33 and 35 really overall is where the sort of the harmonics, if you like, of the market. Not talking about Carney's, Gartley, etc. I'm talking about just the dynamics of money flow in markets and the way that supply and demand really works. So yeah, that, right? So what else can we look at for this coin to kind of get some ideas? Perhaps the Ichimoku cloud will give us an idea of where we might find some future resistance or support. And what we're seeing, of course, is that really it's looking at the current price action and shoving it off to the future. So there's not a great deal when you're looking at a heavily trending market that you can learn from the Ichimoku cloud in terms of where we might find support at. But we do know that if this area right here means anything, then it means three things now: the 236, the current market structure that we talked about already, and of course the Ichimoku cloud area. So if we did see a pullback, I'd want to see a bounce, then I'd really kind of need to see a bounce in about that $15 target. Okay, so that would be $15 would be my target towards the downside. Maybe having got three possible sort of things in here, it makes it worthwhile propping an extra line on there. Let's hide the Ichimoku cloud, take a look at a couple of different things as well. We're still on the 24-hour time frame, so we're doing it from a broad perspective. Let's see, what does TradingView think the Fibonacci say? Not a lot of lessons from TradingView just there. That's its own particular TradingView idea there. Let's drop on, shall we drop on the TD sequential? How high have we got so far? Have we got as far as a 9? We have indeed. We even saw a little bit of an inflection at that point. Now we're pushing past it. Interesting stuff. But if we saw a pullback from these regions, wouldn't be a surprise from a TD sequential point of view. Are we therefore able to look for a 13 anywhere? Do we have a 13 anywhere else on this one? Not seeing it on the 24-hour time frame. Anyway, cool. So we'll get rid of that one for now. So we could see the potential for pullback in this region because we've had the 9 already coming in there. That's interesting. Are we obviously in terms of fractals? Yeah, we've got a fractal just there as well in terms of Ichimoku, or in terms of Williams fractals. Yeah, we're still pushing on past, you know, managing to get some decent things. What we really want to see, if we want to keep this going, by the way, over the short period of time, or over the near term future, sorry, is what I mean, is to continually be breaking the wicks of the previous wicks with our bodies. Okay, we had a wick here, nothing in terms of wicks made a difference. It was this wick here made no difference. Body breaking it, that started to make, you know, the body here actually was just shy of it. Wick didn't do it. It was the body afterwards. This is where we got the follow through at. You can see a little bit of inflection here, but it became support resistance. You know, this was where we pushed through. Then again, we pushing through. So want to see us pushing through constantly. That means that current situation stands, you know, start to get a little bit kind of worried in a sense if this turns into a doji candle here, drawn down below the $25 period, haven't had a 9 on the TD sequential and daily time frame, with the potential for us to look down the way. We could even be looking down to just $20 in terms of the middle of the Donchian channels there as an example. Maybe I should try to wrap this up in terms of the daily time frame by taking a look at everybody's best friend, the Bollinger Bands, and showing that we're tracing this up the way, and it's doing a really good job. It's really, really strong, good upward trend. That's kind of what we've been getting at this whole time. We just need to see this continue. If we start taking out this candle, or previous day's candle, and especially if we take out this sort of little market structure. Oh, I just disappeared. That's cool. I don't need me on the charts if my camera battery is going to run out. So hide. Whoa, can't hide that. Hide my face though. There we go. That'll do. So yeah, so cool. Just finishing up here then and saying, yeah, and that this is strength trend moving towards the top side. Very, very good. Nice to see it. I'm happy to have seen this all happen as it has been happening so far. If we continue to trace that up the way, very, very good. But in terms of the lower term timeframes, is there anything then perhaps that we could find which is showing us that maybe we're getting into a toppy area perhaps at all? Let's see. Divergence, yes. Divergence, yes. Divergence, yes. Divergence, yes. So basically divergence all around. Have we got a hidden bullish divergence? So yeah, we've got a bit of the old hidden bullish divergence. That's good to see on the MACD, not on the RSI, not on the DMI. Yeah, on the stochastics as well, we had a bit of the old hidden bullish divergence. Did we? Yeah. So so that's good, and that's taken us up so high, so far. So that's great. You want to be riding this up the way. Perhaps for a lot of people, what they need to look towards, perhaps in terms of managing their positions, is something like the parabolic SAR. Really, don't. I've heard some people talk about this disparagingly in the sense that I heard somebody say recently, "Oh, I used to trade. I was so bad. All I used to do was do this and use the parabolic SAR." Well, my goodness, don't. Somebody's looking back at their past and they used this. If they were using it correctly, then there's no problems. You know, they shouldn't be disparaging themselves. So if you use this right now, then don't feel like you're doing anything too basic. It really isn't. You could be looking here and saying that you'd be happy enough to take profits in any of these regions so you don't have to suffer the question marks that come in as we try any sort of pullback. You know, and that currently is lining up on the 4-hour time frame at $22. But in terms of the daily time frame, it's lining up at, yeah, around about that $20 area. And that, of course, as well is lining up with the middle line of the Donchian channels, bringing us in for a 50%, perhaps retrace between the lows and the highs if we were to have one. So that would say my sort of, if we're going to remain ultra bullish on this thing, then what I'm looking for is for the prices to operate somewhere above the 50%. And if they had to come to the 618, okay, but that's of course not something you're going to hang on to. Above the 50% Fibonacci retracement from its previous low to its high overall on this daily time frame. Not divergent, because there's no lows in here, so you can't say that. So overall, we're doing okay in terms of this little thrust up the way, because, well, there's no lows really to make the comparison from, so that's flattering to deceive somewhat. But then looking at our highs here versus our previous highs, and yes, it is divergent. Doesn't mean we can't go on any further, but if we did push up here, I'd be definitely taking profits at 35, so you've been warned. Thanks very much for tuning in. I'll catch you in the next episode. Like I said at the start of this, likes and subscribes really do help. If actually, no, I don't know if I did say that. Please hit like. I would really appreciate it. Right, folks. So, thanks, by the way, to Drew's Tech for giving me a tip during this show. Always do your own research. I'm not a financial advisor. Thank you very much. And elbow cough. Right, always do your own research. Yeah, funny. Right. How did that tweet get on there? 5 tweets. So lots of people like that tweet, so I should probably do lots more of them. No BS, no FOMO, no greed. Got Gank. I love you, Gank, man. I love you, Gank. Cool, excellent. So great. Nice one. Find me. I've got a Discord, by the way, folks. Link in the description. Got a Patreon. Links in the chit chat and the description. Links in the description. I've got a big heart, so be my friend. I'd like to see you again in another stream. Love you all very much. Right, we're done here, folks. We're done here. Thank you so much for tuning in. Really do appreciate it. Every single time I do one of these streams, I'm left at the end feeling like I've got a great group of friends. Everybody is absolutely growing along with me. Really do enjoy it. Fantastic. To the future, to the moon, to the next live